So
Good
nice,
morning, sir.
nice to interact. Good morning. I hear that there are altogether 51 or 55 people have logged in now. So today's presentation is on types of securities and mitigating techniques. So now, in other words, we will be covering the important aspects in relation to securities for bank lending. Can you all see my face?
Yes, sir.
Yes.
Right. Yes. So now, before I start, there are certain things which I want to tell you all. Number one is you please ensure that you off your mobile. You off your mobile because the reason is if you while the session is on and if your mobile is if your mobile rings, it will be a hindrance to the others. And other thing what I want to tell you all is when you are following these classes, please concentrate without having any conversation with your home people or with any people who are any of those who are surrounded there, because everything is recorded. I must tell you all, everything is recorded. Because in the previous sessions, we have noticed some people, while they were following the classes, they have been talking to their family members. Everything, later on, when we went through the recording, every word, what they spoke, have been recorded. It's still there. It's still there. So if you want to speak to any of your people there, you have to put it on mute and you can talk to them. We have no objection, but only thing is be careful when you are talking. Every sentence you speak, every word what you speak while the session is on will be recorded. So when it is recorded, it's not good for you, because later when we rewind this particular session, we could see the people who have spoken, their names are appear. When you open your mouth, your name appears. The technology will pick. When you open your mouth, your name appears. So last time also we have heard dogs barking. So those of course we understand. But only thing is, main thing is because you all are following from the comfort of your residence. So please concentrate. Be careful when you are talking, because every word what you speak will be recorded and it is there. It is there. So now in this session, as I told you all, now this is also a online session we are conducting. I am conducting this session from the comforts of my residence, but of course I am missing my students. The last from the day this COVID-19 started, we have not been able to conduct any physical sessions. So when we conduct physical session, it is we get a lot of benefits and advantages, because we could see the faces of the students. We could see their body language. We will know whether they understood. Now here, virtually, there is in this room, there's no one. There's no one. I am addressing a blank wall. So I am only looking at a blank wall and addressing. I can't see your images. So you will know the difficulty I have in making the presentation in the absence of the physical, in the absence of the students, because we are addressing an empty blank wall. So anyway, it's as far as you all are concerned, as far as the students are concerned, you all have a lot of benefits. Why I say that? Because the entire session here will be recorded. It will be recorded. So over and over, you can revisit this site and clear all your doubts. So you are at a I would say you are at a tremendous advantage. So coming back to about me, my introduction, I'll just give a brief introduction. I don't know how many of you would have heard about me. I am Rajanathan. My name is MCV Rajanathan, because I stress my initial, because I am very well known by my initials, MCV. When you say MCV, most of the people, they know Rajanathan means MCV, because I started my banking career with HNB. I worked at HNB for 30 years. Then after retirement, actually on a it's a what you call premature retirement on a voluntary scheme, I joined Pan Asia. I was at Pan Asia for nearly 4.5 years. I was a head of credit administration at Pan Asia. Then thereafter, I moved to Union Bank. I was the head of credit administration and recoveries at Union Bank. Then thereafter, I joined Amana Bank. I was invited. It's a new bank to start the credit administration. So I was there for nearly close upon 4 years. Then from there, I went to Cargill's Bank. I was the head of training and development at Cargill's Bank, where I was attached to for about 4 years. Then I left Cargill's Bank also. Now I am virtually, I am enjoying my retirement, but of course I am conducting a lot of the online sessions because I am also in addition to the IBSL, I am also in the panel of Central Bank and various other external authorities also. Time to time they used to call me to conduct sessions. So I have conducted several sessions on this particular topic. I have also released a book on this. I will talk about it later. So now this session, I must say, it's going to be a very interesting session. Why I say that? Because in this session, I will be sharing a lot of stories. Stories in the sense, not gossip stories. Stories, real stories, true scenario in relation to the subject of the topic of discussion today and as we go forward. Now there will be altogether 4 sessions. There will be altogether 4 sessions. We have lined up 4 sessions, but due to the time restrictions, certain areas, we have minimized. We have summarized. But of course, you have no problem because I will be covering everything. So before I proceed, I just want to find out from you all whether you all are in possession of the handouts which was made available to you by the IBSL. Have you all got the handouts?
Yes, sir.
Right.
Yes, sir.
Right. So you better have the handouts with you. Concentrate on this session. And when you go through the handouts, remember some of the slides may not reflect in your handout. So you don't have to worry. There are altogether about 200 slides here, close upon 200 slides. So I have given you only the important slides in the handouts. Only the important slides. So some of the slides may not appear in your handout, so don't worry about it. Don't worry about it. Even though it's not there, you don't have to worry because I have carefully selected only the important handouts. In addition to that, while I am making the presentation, if you have any doubts, please stop me and ask. You don't have to worry. Don't think that I will not humiliate anyone. Whatever questions you ask will be respected and the answers will be given because this is an opportunity. So you don't have to feel shy about it because you have come here to learn. Today you have come here to learn. So you may have lot of doubts. So all what I talk here today, don't just say yes. If you have any doubts, then in there you can stop and ask me. And at the final session also, I will give you time for you to ask questions. So you have the handouts. Today's session, you are in possession of the handouts. Now we will be having 4 sessions. Today is the first session. We are starting at 8:30. There is a slight delay. We are hoping to conclude the session by 12:30. So please concentrate. In between, if you want, I can give you a short, but we will adjourn for about 5 or 10 minutes. So now I am going to start the session. Please listen to this session very carefully. Concentrate on this. Remember again, I am telling you, reiterating, do not talk to anyone. If you want to talk, ensure that you put your this thing on mute and talk. Otherwise, whatever sentence you speak will be recorded. Because previous sessions, I have noticed some people, they have been talking to their wives, husbands, everything is recorded. It's a real embarrassing situation because there are about 180 people who have enrolled for this program, but today, as it is about 55 are joining here. So now they will over and over, they will be going through it. In addition to this, IBSL officials are also online. They are also watching them. They are also monitoring it. Right. So now, types of securities and mitigating techniques. So this is the topic of our discussion today. Now, when you say in this course, these are the area which we'll be covering in this particular session. There are 4 sessions. We will be covering various types of securities acceptable to the banks as security for lending, the operational aspects of such securities, the management and monitoring aspects of such securities, mitigation of risk, enforceability of such securities, insurance, compliance. So these are the 4 areas which will be covered in this particular session. And there will, for your exam, there will be a question on this topic, for which you will be entitled, you will get 20 marks. You will get 20 marks for security. Now, I will be setting the paper. I am not giving any assignment because I will be testing you all. So the questions will be based on the presentation what I am making. So I will not go out of the presentation. So there will be a question. There will be a detailed question. That question will cover various aspects, and you will get 20 marks. Just imagine if you are getting 20 marks, that will take you to the diploma. And when I correct the papers, I must tell you all, I am not looking at, particular in looking at the grammar of even if the grammar, you make grammatical mistakes, I don't care about that, because this is not an English class. What I look is, when I correct the papers, if I am convinced that the candidate has got a proper understanding of this subject, you get the full marks. So remember, I am not looking at the grammar. So don't worry about if you make grammatical mistakes, don't worry about it. Main thing is, in your own language, in English, you have to tell me, you have to convince me that you have got a proper understanding of the subject. So if I am convinced that you have got a proper understanding, you will get the full marks. So these are the 4 areas which we will be covering. Now, story-based learning. At the very outset, I told you all, I am going to share a lot of stories. When you say story-based learning, it's the most powerful way of imparting knowledge. In the United States, they have found story-based learning is the most successful mode of teaching. And true scenario that has taken place, tell enough stories and learning will remain in your heart. You may forget the learning, but the story will remain forever. That is the uniqueness of this program. You will hear a lot of stories in this session. That means, when we narrate stories, people like to listen to stories. So these stories which I am going to narrate to you all, it's directly connected to the topic of discussion, directly connected to the area of security. So we have, in our 46 or 47 years of banking exposure, we have come across a lot of episodes. So I am going to connect those episodes to the subject so that it will be very interesting for you, and it will always remain with you. When you share the stories, it will always remain with you. That is the idea in sharing these stories. Now, credit delivery is the backbone of banking. I don't have to tell you all. I believe all of you all are working in banks and financial institutions. You ask anyone, they will tell you credit delivery is considered to be the backbone of banking. Without credit delivery, banks cannot operate with profitability. The work connected to all aspects of credit and credit operations could be considered as a double-edged sword. It could either create stability or instability in banks and financial institutions. In other words, it could either make or break banks and financial institutions. It is a bread and butter of the banks. That means if you are today, if your management asks you to go as a branch manager, they expect you to deliver, in the sense, credit delivery. You can't, good olden days when we started our banking career, when we are selected as a branch manager, we love, and that is our ultimate goal, to become a branch manager. But at that time, during our time, we never had this type of competition which you all are facing today. Today, you all are having there are about 27 or 28 banks which are operating in the country. And the slide is clear? Fine. So now, there are sometimes we have to face this. Story-based learning, I have told you all about the story-based learning. So when you say about credit delivery, it's a backbone of banking. Credit delivery is considered to be the backbone of banking. What I was trying to tell you all is during those days when we started our banking career, if a person is asked to go as a branch manager, they immediately jump and go. Why? Because when you say everybody's final goal, ultimate goal is to become a branch manager. Because during those days, we never had this competition. So today, you find there are about 27 or 28 banks operating in Sri Lanka. In addition to that, there are about 45 odd finance companies. So you could just imagine the competitive environment under which you are working. Because when you are, today we find, there are people when you are, today when they ask them to go as branch manager, they are a bit reluctant to go as branch manager. Why? Because they know it's a very difficult task. You can't just go and sit under air-conditioned comfort. Because when you go, the management of your institution, bank or finance company will give you a target. So you have to release loans, you have to grant credit facilities. At the same time, you have to recover also. And you have to get deposits also. So you are given a credit target, you are given a deposit target, you are given a recovery target. So all these three are very major components in branch banking. So you can't go as a branch manager and sit under air-conditioned comfort and say, I am not going to give any loans because I am scared. I just want to come and manage the existing portfolio. You can't do it. Why? Because the banks are dependent on credit. Because the credit on every facility, when we grant, there is an element of risk. At the same time, we are also, we have to ensure the safety of the exposure. So because of that, and you have to ensure that you recover the facilities on the due date. So all these components are very difficult for you to manage unless you have a proper understanding of the nature of each security what you are taking. Security in banking, it's a very important aspect. When you say security, you should know why we are taking security. You must have a proper understanding. Now, today's context, just imagine we never even dreamt that we will be conducting classes from the comfort of our residences. We never even dreamt that we will face this type of situation. Today, the whole world has come to a halt. Whole world has come to a halt. Why? Because of the COVID-19, which nobody expected. Nobody expected that the country, that we will face such a situations. Most of the airports in the world capitals are closed. We are all under house arrest. We can't go out. We can't step out of the house. You can't talk to a neighbor. You can't entertain people. So see the situation. So under this particular situation, banks have a major responsibility. Because why? We have to ensure the safety of our exposure, and here only the securities plays a major role. Now, today, if you find there are two industries, in spite of the corona crisis, they have made very good progress. Number one is banks, because banks, of course, they are granting moratorium for customers. Ultimately, they have to pay. In addition to that, there is another industry which has made tremendous progress. What is that? Can you all tell me? Under this COVID-19, there is another industry apart from
communication.
Communication also there. Yeah, very good. Now, in addition to that, there is another industry. I read in the paper, there was an article. There said banks, even though the customers are unable to pay the loan, we are granting their moratorium, for which we will be charging interest. We may give interest waiver and all those things. Interest. In addition to that, there's another industry. Can you tell me what is?
Health industry.
Not health industry. Yeah, health industry also. Health industry. You can't say health industry because health industry also doctors and the health sector is affected to a great extent, because now the major the priority is COVID. In addition to that, what's the other one?
So online business?
Just not online business. There's another business which is directly
supermarket.
No, which is directly connected to banking. I'm giving you a clue, which is directly connected to banking. What is that industry? You know, if you think carefully. There is an
Insurance.
very good, excellent. Insurance, excellent. Insurance. Insurance is one industry which has made tremendous, what you call, progress in the sense this COVID-19 has not affected them. Why? Because claims are minimal. Most of the vehicles are in their garages. Am I correct? Even my vehicle is in the garage for the last 1.5 years. But on and off, we used to go to the supermarket and the church and all these places. But apart from that, our movements are curtailed. Am I correct? So the claim on the motor insurance is at a very minimal, because most of the people are indoors. And apart from that, there are some people, they have even gone to the extent of enhancing their existing insurance cover, covering their buildings and all those things. They have enhanced it. So if the what you call building is was insured for 10 million because of the crisis, because of the situation, sometimes people may have gone and enhanced the insurance. Apart from that, the motor insurance, now we are paying the premium to the insurer, but insurer is also happily renewing the policy, because they know very well they are the renewal, the claims have come to a bare minimum. Why? Because vehicles are not plying on the roads. Am I correct? So insurance and banking is two areas which to some extent, because there was an article written in some of the experts, so they have categorized these two industries, banking and insurance. Banking, of course, we have a tremendous responsibility to recover. Insurance, of course, automatically they renew the policies. But in banks, of course, they have a tremendous responsibility. They have to go and recover the facilities. So, which is a major challenge for them. So, coming back to the topic, credit delivery is a backbone of banking, which you all must understand. I am sure all of you are fully aware of that. Credit delivery is considered to be the backbone of banking. Without credit delivery, banks cannot operate with profitability. The work connected to all aspects of credit and credit operations could be considered as a double-edged sword. It could either create stability or instability in banks and financial institutions. In other words, it could either make or break banks and financial institutions. It is a bread and butter of the bank. We have to grant loans. So under the present situation, we have a major challenge. You have a major challenge. If you are a branch manager, I am sure you will not be able to sleep in peace. If you are a branch manager, I am sure you will not be able to sleep in peace. Why? You are worried. You are granted loans. You have to recover the loans. Now, credit risk. What do you mean by credit risk? On every advance what we grant, there is an element of risk of non-payment. Credit risk is the risk of default of capital plus interest by the borrowers of the bank, which could contribute towards loss of income and reduction in the value of assets, which will greatly affect the profitability of the bank. So therefore, reliability and enforceability of the securities have to be constantly ascertained. The legally enforceable security should be obtained to minimize the risk, because you should have a proper understanding of every aspect in relation to securities will be explained by me to you all in a language which you will understand. That's why I am connecting the stories. So anybody can grant loans. Only an expert can recover. Only an expert will know how to secure. Only an expert will know what are the risks on each security. On every security what we take, there's an element of risk. Just because you are taking security, that doesn't mean that your advance, the prepayment of your advance is guaranteed. Because on every security, so you have to manage the security. Every security what you take, you have to manage. Now, I am going to give you another good example, another story which I have narrated at various forums. Many years ago, in one of the banks where I was at, can you all hear me? You all can hear me, no? Can you all hear?
Yes,
yeah.
sir.
Yes, sir.
Many years ago, in one of the banks where I was attached to, the CEO of the bank told me, one day called me and told me, there is a seminar on credit risk, a 5-star hotel in Colombo. He said there are a lot of bankers, senior bankers have been invited. So he said, I am nominating you to attend this program. It's a half-a-day program. Can you go? So I said, okay. And I went for this program. It's a half-a-day program in one of the 5-star hotels in Colombo. So when we went for the program, we were all seated. Just before the session started, the moderator, in his introduction, he thanked the participants, welcomed the participants, and he said, we have invited a senior banker, I don't want to mention his name here, to make the keynote address. So he said, sir, thank you very much for accepting our invitation. And he invited that gentleman to come to the podium and make his keynote address. So this gentleman, a senior banker, retired banker, walked up to the podium and said, good morning, ladies and gentlemen. This program is about credit risk. And he said, today, crossing the Gold Road in Colombo is the biggest risk in the world, he said. We were all stunned for a moment. We were all stunned. What is this gentleman talking? We have come for a program on credit risk. He is telling today crossing the Gold Road in Colombo is the biggest risk of the world, he said. We were all wondering, what is this? Then he said, if you are a careless person, if you want to cross the Gold Road, you will not look at the color lights, color signals. You are not bothered to look at the color signals. You will just cross the road. But by crossing the road, you are putting your life into a greater risk, greater danger. But your anxiety is somehow to go to the other side. Whatever cost, I want to go to the other side quickly as possible. So I am not looking at the color lights, whether it's red or green or yellow. I am not worried because my intention, my desire is to go to the other side as quickly as possible. That is category number one, if you are a careless. If you are a careful person, you will look at the color lights. Once it turns to green, you will slowly cross the road. Why? You are adhering to the traffic regulations. But even though you are crossing on the green light, let me tell you, your life is not guaranteed, because you could still be knocked off by a maniac, because there are accidents which have occurred when people were crossing on the pedestrian crossing. Some motorists, they come in full speed, they don't look at the people. So still you face a danger of being knocked out by a maniac if you are crossing on the green light. But if you are too careful, these are his words. If you are too careful, what will you do? You will wait at the Gold Road and wait at least 3 or 4 people get collected, and you will cross with them as a group. Then the chances of you getting knocked off is minimal, because an oncoming motorist will not miss a group of people crossing the road, because 4 or 5 people cross. So he said, I, being a retired banker, I belong to this category. Whenever I want to cross the Gold Road, because it's a high risk, I wait. When the green light is on, I don't cross. I wait at least 4 or 5 people get collected, and with them I cross. Then my life is, to some extent, I am safe, he said. What is the message he was trying to give? He said, when you are granting a loan, when you are assessing or processing a facility loan, put yourself as a person who is crossing the Gold Road in Colombo. Look at all sides. What he meant was, look into all the stipulations of the approving authority. Don't take shortcuts. Look into all the securities which have been stipulated, and look into the possible risks you may face in accepting those securities, and mitigate all the risks. Then your advance is safe. So, this is a very good lesson which this gentleman told. I have shared this at various forums, because he said, today you are working in a target-oriented environment. You are being pressurized. Why? Your main target is to reach the other side. Your main target is to achieve the target. So by achieving the target, you may slip, because if you do not assess the security properly, you do not assess the risk which are visible in some of the securities, and do not take the necessary precautions to overcome such risk, you are putting your advance at a greater risk. So this is a very good lesson story, true story, which this gentleman told, which I have shared it in various forums. Now, after this gentleman spoke, about this, to make my session more interesting, I have captured this from the internet. Now you could see this family is crossing, not on the pedestrian crossing. Haphazardly, they are crossing with their 2 children. So you can see the amount of risk they are facing. Why? Their desire is to somehow or other go to the other side. Now see, this particular family, although they are crossing on the pedestrian crossing, they are adhering to the traffic regulation, they are looking at the color lights or whatever it is. So still they face a risk. Now this category, now they see this lady also crossing the road with ice cream cone on one hand, but she also faces the risk of being knocked off. But look at this one, people crossing as a group. So the chances of them being knocked off is very, very minimal. So this is a good lesson for the bankers like you all. This is a good lesson for bankers like you all, to ensure that you adhere to all the precautions. This is a true story which this gentleman narrated. So I am sharing this with you all, because we have come across instances where several, there are a lot of people who are known to us have met with accidents. Now I could share a very unfortunate incident. The Pan Asia Bank's former managing director, general manager, CEO, he was knocked while crossing the road at just opposite his house. He was using the pedestrian crossing with his wife, but unfortunately he was knocked off and he died. After 3 or 4 days, his wife survived. So this is a good lesson. I am giving this as an example, so that this particular story will remain with you forever. Am I correct? Is it clear to you all? Is it clear? Yes or no?
Yes, sir.
Right. So now coming back to the other one, there is an element of trust where a customer or depositor places on their bank to take care of their money. The bank is accountable for that money and the trust placed on it by its customer. In addition, the shareholders of the bank expect a fair return, and they expect their banks to be mindful of the types of risk they take, as well as identifying the risk accurately and taking the necessary safeguard. In other words, the last sentence is very, very important. That directs at you. Your bank expects you to be mindful of the types of risk you take, as well as identifying the risk accurately and taking the necessary safeguards. So in other words, your bank is expecting you to be mindful of the types of risk you take, as well as identifying the risk accurately and taking the necessary safeguards. So all those things will be explained. Now, definition of security. A security is an encumbrance vested in a creditor over the property of his debtor for the purpose of securing the repayment of the debt. It is a right in the property of another which enables a person who is entitled to receive a definite value from that another in default, if so, receiving it to realize it from that property. The purpose of the security is to ensure or facilitate the fulfillment or enjoyment of some rights vested in its owner. Now, roll-up security in bank lending. When you speak about roll-up security, I can give you another good example. During our banking career, I was attached to a particular bank at Gaul Road. At Gaul Road, there is not a restaurant. I won't even call it a restaurant. We call it a batkare, normal, ordinary place where they are serving lunch and they are giving breakfast and lunch. It is not a posh place. It is at Gaul Road, located somewhere at Gaul Road. I don't want to tell where the place is, because in one day when I was narrating this in the class, one boy, he had the courage. He stopped me and asked me, "Sir, can you please tell me where this place is?" I said, during my lunch, tea time, I'll tell you where this place is. So now this particular place, what I am trying to say is, here they give very good lunch, very good breakfast. They close at 6 o'clock. One day, it is in close proximity to the place where I was attached to, the bank I was attached to. One day when I went for lunch, the place was packed as usual. It was packed. But the Mudalali, he was at the counter. Mudalali was at the counter. But he used to have eye contact with each and every customer who walks in. Always these Mudalalis, I have every time when I step in, I have seen this Mudalali seated there. So when I walked in, immediately, as he saw me, immediately gave instruction to his boys, waiters, and just ask him what he wants. So when I went there, the place was packed. So there was a place just opposite the counter where I was asked to sit. I sat, and within 2 minutes, they brought the lunch. So while I was having the lunch, I was attracted to see. I was attracted towards the counter because why I was attracted? Because there was a conversation which was going on between the Mudalali and another walk-in customer, the customer who had his lunch, and he was having a helmet in his hand. He was having a helmet in his hand, and he was talking to this Mudalali. So I was compelled to listen to the conversation. It transpired. This gentleman had his lunch, for which he has tendered 5,000 rupees or 2,000, I can't remember. He had tendered a large note. The Mudalali said, "I don't have change." Mudalali had change because for a day, the Mudalali himself told me they sell about 500 lunch packets, and in addition to the breakfast. But Mudalali told, "I don't have change." Well, Marcelina, the Sinhalese spoke to him and asked him, "Do you have change?" So the customer said, "I don't have change." So Mudalali said, "I also don't have change." Then the customer told, he's a walk-in customer, appeared to be a walk-in customer. When you say walk-in customer, he's a new customer. Mudalali, he told the Mudalali, "Shall I go out? Mama Gila Marpula again. I will go and change the note and come back to you." But what do you think the Mudalali would have told? Mudalali said, "No, I won't allow you to go. If you go, you will not come back." Then the customer said, "But if I had to go and change it, no." So then the Mudalali imposed a condition. He told this customer, "Okay, if you are going, do this." What is the condition? Can you all tell me? According to your assessment, you are listening to this story. What do you think the Mudalali would have told?
To keep his helmet and go.
Yeah, very good. He told the customer, helmet you keep the helmet and go," he said. So the customer said, "If I keep the helmet and go, how can I go and change it? Because I had to go out, I had to go in the motorbike because Wall Road is a vast area. You don't find any small shops there. All these big luxurious showrooms you have, they will not change the money for him." So the Mudalali told this customer, "You keep the helmet and go." He said, "No, if I keep the helmet and go, I can't. How do you expect me to go?" He said, "I don't know. If you go, you will not come back." Mudalali said, so the 125 rupees, Mudalali didn't want to take a risk. So then this gentleman was compelled to speak to each and every customer who walked in. He asked, ultimately he was able to change it. He changed it. Ultimately changed it and settled the lunch money of 125, 150 rupees at that time. And that was the end of the story. Then after 2 or 3 weeks after this episode, one day when I walked into this Vatkade to have my lunch, because we are also as bankers, sometimes we don't look at the time. All of a sudden we look to sign Barnakota, they say, "My God, it's 2:30 or 3 o'clock." So immediately we rush. So I rushed in to have my lunch. So while having the lunch only, I realized I had not brought my purse. I had not brought my purse. Why? I came in a hurry. I have forgotten to take my purse. It has happened to me many times. Then still I didn't want to take a risk. I finished my lunch. Then I went and told the Mudalali, Mama purse I have not brought my purse. What do you think the Mudaladi would have told me? I didn't have a helmet. What do you think the Mudaladi would have told me?
For you to give to the following day.
Right, very
For
good.
you to pay the.
Yes, very good. The Mudaladi said, no problem, you can pay it later. Mudaladi said, no, it's not a problem, you can pay it. Don't worry about it, you can pay later. So evening before I left home, I went back to that particular shop, Batkade, and settled my lunch money. These two episodes, why I am narrating to you all today is, we as bankers are also taking this, what you call, helmet as security. But here, the difference is, here the Mudalali was not interested to find out whether this particular gentleman is the legal owner of this helmet. He was not interested to find out the marketability of this helmet, whether he can sell it. He was not interested to find out the value of this helmet. So banks are also doing the same thing, but we are doing it in a more dignified and refined way. We are also taking security, helmet, but we are doing it in a more dignified way. So here the Mudaladi, just imagine an uneducated Mudaladi, for 125 rupees, he didn't want to take a risk. For 125 rupees, he didn't want to take a risk. In case, if this customer has not come back, if he has allowed him to go without the helmet, he would have sold the helmet and made a profit. But the next episode where the Mudaladi didn't ask anything from me and he said, you can pay me later, it's also another good lesson for you all. What is a lesson? We as bankers, we don't always insist on securities. That's why I want to make it very clear to you all. In your banking life, in your banking career, you may come across such situations, such eventualities. If you go through your own banks, I don't know, I know there are people from various banks. If you go through your own bank's annual report, and you will see that your bank may have lent billions, not millions, billions of rupees to customers solely on the integrity and past performance of the customer without any security. So we don't always insist on securities. If you may come across in your banking career, when you are given the responsibility to manage the credit, to manage a branch, you may come across such episodes where you will be forced to waive off the security. You could waive off the security. You can convince your bank management the necessity of waiving off the security because you have absolute confidence in that particular customer. But in case if the customer, something happens to this business, also you know how to recover it. You know how to recover that. You will analyze, you will assess the credit risk in case now the customer, as long as he is there, everything is okay. But in case something happens, in case the business goes bankrupt, in case the customer dies, how you will recover. All those aspects also you have gone into it. So remember, security, these two episodes, I have given 3 stories altogether. These 2 episodes which I am narrating is a eye-opener for you all. When you all are taking security, you can't just take security like the Mudalali taking that helmet. We have to look into various aspects. We have to look into the aspect to see whether he is the owner of this helmet. When did he purchase it? How long he has been in possession of the ownership? Whether you can sell this helmet and what is the amount you will get. So all those things have to be assessed and ascertained by you all in security. At the same time, if you come across situations where you are fully confident of the customer's ability to repay the facility, and even in case of some unforeseen circumstances, you know how to recover it, you can even waive off the security. But in this particular session, we are going to touch about securities, but I am just giving you as an example. Now, what do we mean by the word security? I don't have to repeat it. You will know the word security, which is commonly used in banking, especially in credit appraisal and other connected areas, is said to be derived from the Latin word securitas, secure, safe, free from care. When we are taking security, we are, the bankers are, we don't have to worry about it, because in case of an eventuality, we know how to recover it. That's why we are taking a security. Now, if the principle of lending justify the assistance of a customer, then the security will be obtained as a form of insurance against an unforeseen development. When they process the credit facility, when you are processing the credit facility, when you are going through all the important aspects in determining the suitability of the facility, then once you have decided to grant the facility, then comes the security. The next aspect is security. How you will recover? What is the security you will take? How you will secure the advance? Now, importance of updating the knowledge bank, I don't have to stress on this, but just for your benefit, I must tell you all, towards arriving at a sound, satisfactory and acceptable decision, a banker should possess certain important aspects. What are they? Knowledge in all important aspects of securities, its marketability, risk involved and its operation, determine the quality of good security with minimal risk, understanding the benefits in accepting good securities towards meeting any eventuality, knowledge in securing an advance and setting the appropriate mechanism to face any eventuality which could arise due to non-payment or default. What I'm trying to stress here is, as bankers, as people who are handling responsible position, it is very important for you to update your knowledge bank. You must ensure that you go through the newspapers regularly and update your knowledge bank. When I say you have to go through your newspapers, it doesn't mean that you have to go to the paper stand and buy the paper. You can, from your smartphone, you can read the newspapers. You can update your knowledge bank, because that is very important. Because when, as a branch manager, as a bank manager, as a person who has been entrusted with the responsibility of credit delivery, you also should have proper knowledge of what is happening locally as well as globally. What is happening, you have to update, because that is a very important tool for you to take correct and appropriate decision when you are granting a facility, when you are taking the security, because the security what you hold will have a direct bearing on certain news developments. So this is also very important for you all to understand. Determining the suitability of security, the factors to be considered. How do we decide in accepting which security is suitable for our advance? How do we decide? Match the proposed security with the type ranking of the proposed borrower. Match the security with the anticipated period of risk, repayment of the facility. Assess the value and enforceability of the security to overcome any eventuality which may arise due to various factors resulting in the non-payment of the advance. So when you are taking a security, there are various securities which are available, which have been authorized by your own bank towards acceptance. When you are taking a security, you have to ensure, you have to match the security with the proposed borrower, match the security with the anticipated period of risk repayment. If I ask you a simple question, if I come to your bank for a loan of, say, 5 million to be repaid within a period of 15 years, if I give my car as security, will you accept? I, as a customer,
No, sir.
No, you won't accept. Why you won't accept a car as security for 15 years?
Yeah, because after 15 years, we won't be able to recover if there's a default, we won't be able to recover. That car won't have value.
Yeah, very good, very good, very good answer. Because the reason is, a car, after a certain period, there's a depreciation value. Now, of course, the car market is, it has, gone, it is down because of the import restriction, but still for all, motor vehicle, there is a depreciation value. So therefore, when we are granting if a customer says, I want a loan of 5 million to be repaid within a period of 15 years, for which I am giving my car, let it be a BMW, let it be a Benz, let it be a Toyota, let it be a latest vehicle, you will not take it. Why? Because the repayment period is 15 years, 10 years, for which we can't take a motor vehicle as security. So that's what I say, match the security with the anticipated period of risk repayment of the facility. So if you are granting a loan facility to be repaid within a period of 10 years, until the repayment of the facility, your responsibility is to ensure that the security what you have obtained, taken, will remain intact. Will be in its original form until the settlement of the facility. That's why you said car, we can't take it. Why? Because there's a depreciation value. So when we are granting a loan to a customer, if the customer is giving us a security, if the customer is giving stocks, if the customer is giving machinery, if he is giving what you call land and building, we have to ensure, you have to ensure, it is your responsibility to ensure that that particular security remains in its original form until the repayment of the facility. So here only your responsibility comes in. It will be your responsibility. It is a responsibility which will be vested with you. You have to be careful. You have to ensure that this particular security will remain intact until the final settlement of the facility. Even though you are granting the facility to be settled within a period of 10 years, there is no guarantee that the loan will be settled within 10 years because the customer may default. Now see, under the present corona crisis, moratorium after moratorium we are extending the moratorium. Now central bank has again told the bankers to extend it. So just imagine, so when you are extending it, at the same time you have to ensure the security what you have taken, what you hold for this facility also will remain in its original form until the final settlement of the facility. Then assess the value and enforceability of security to overcome any eventuality which may arise due to various factors resulting in the non-payment of the advance. We have to assess the value periodically. We have to, once the loan is granted, your response does not end there. You have to assess its value and its enforceability of the security periodically to ensure that you are in a position to recover this advance in case of any eventuality. Now this corona crisis is a very good lesson for us. We are not seeing the light at the end of the tunnel. Still the situation is very bad because daily we are hearing deaths. Still now, yesterday in UK they have found another variant. So like that, the situation is not that good because still we are not seeing the tunnel at the end, the light at the end of the tunnel. So as far as securities are concerned, at the present situation, bankers have a major responsibility to ensure the security what they hold will remain intact until the final settlement of the facility. Then role of a branch manager, creditor. These are some of the basics which I am touching so that you will know you will get a proper idea, proper understanding of the responsibilities which will be entrusted to you. When you say role of a branch manager, credit officer, their responsibility is to implement your bank's credit policy. Hence, you should be equipped with all the essential ingredients, inclusive of the various and important aspects of securities, its management, operation, and mitigation of risk towards making the correct and appropriate decision in safeguarding the interests of your institution. Your main concern should not only the profitability of the bank, the safety of the advance, which is paramount. Your main concern should be the safety of the advance, which is paramount. Your responsibility commences on the point of the facility being appraised and will conclude only after it is fully repaid. Your responsibility will commence from the point of the facility being processed and will conclude only after it is fully repaid. Now, if you are responsible for, if you are a branch manager, if you are responsible in granting a facility, your responsibility will come to an end will conclude only after the facility is fully repaid, for which you are responsible. You may go to another branch, but still the management of the bank, the finance company will hold you responsible. They will ask you, you are the person who was instrumental in granting the facility. Now this customer is not paying. You can't wash your hands and say, no, this was granted at that time when I was in that branch A, now I am in a different branch. No, you can't wash your hands. So your responsibility will commence from the date the facility is being appraised and will conclude only after it is fully repaid. So you should know your bank's credit policy. I have been stressing the importance of the credit policy because if you are assigned to do the credit area, perform in a credit environment, the first thing you must ask is, can I see my bank's credit policy? You have a right to ask for your bank's credit policy document. The credit policy document of each bank will vary from bank to bank. It will vary from the bank, it will vary from the finance companies to other finance companies. Each will have a different credit policy. So you should know what is a credit policy. Before coming to the security aspect of it, before processing the advance, you should know what is the credit policy of your bank. So remember, if you are assigned to perform in a credit area, credit responsibility, you have a right to ask for the credit policy document of your bank, because that is the gospel. That is the most important document which you have to go through, and you have to execute that, because the credit policy of your bank will vary from other banks. So that you should know. Then different types of securities generally accepted by the bank. Now these are the securities. Now we are coming to the important area of securities. Now I have covered some of the basics. Now I am coming to the securities. Now different types of securities generally accepted by the bank. These are the types of securities which the banks are accepting. Your bank has been authorized by the management, by the central bank, to accept these securities. In other words, this is the menu card. This is your menu card. So you should know on every security which is listed here, there is an element of risk. What are the risks? We will explain to you all. So you should know what are the risks, and you have to take adequate precautions. Is it clear to you all? Can you all hear me? Can you all hear me?
Yes.
Yes, sir.
Right. So immovable property, immovable machinery, movable assets, motor vehicles, stocks in trade, guarantee, corporate guarantee, life insurance policy, cash securities, marketable shares, gold, pawning facility, demand promissory notes. So these are the securities which have been authorized by the central bank, which have been authorized by your bank management to accept. So on every security here, there's an element of risk. So how do you mitigate? And how do you take these securities? How do you take this security? We will explain to you. Don't worry. Everything I am going to explain, everything in detail, and I will explain to you. I will give you a lot of examples. So this will always remain with you, not only for your diploma program, even towards execution of your responsibility. So remember, this is your menu card. So now here, before we take any security, there are two important aspects which you have to adhere to, which you have to satisfy yourself, which you have to ensure to the satisfaction of your bank management. What are they? Now, that Mudalali, when that gentleman walked in and when he wanted that person to keep the tight helmet, he was not interested to find out whether he is the owner of the helmet. But we can't do it. We have to ensure whether he is the real owner of that helmet. I'm just connecting to the helmet so that it will to make my session interesting. So you have to find out whether he is the original owner of the helmet. He says, no, I am the owner, but we don't. As a banker, we will need documentary evidence to satisfy that he is the real owner. So that's the first step we take. Number two, valuation clearance. We have to find out for what will be the price of this helmet today in the open market. But what is the amount we could derive if we have to sell this helmet today? What is the amount we could derive in case if we had to sell the helmet after 5 years, because we are granting a loan prepayable in 5 years? Then this helmet, what we are taking as security, will it get rusted? Will for 5 years, will it get damaged? So all these two aspects we have to settle. Let it be immovable property, let it be building, let it be machinery, let it be stocks in trade, whatever, motor vehicle, whatever item we are taking, these two elements we have to satisfy ourselves. The ownership of the asset, valuation. Remember, ownership. After satisfying these two aspects, only you can go for the mortgage. If you just go for the mortgage without ascertaining about these two stipulations, you are putting your advance, exposing your advance to a greater risk. So you have now, there are instances, people, in a hurry, they don't want to look into it. They say, no, it'll take a long time if we are going to look into these two aspects. We'll just go and take the mortgage. Don't do that. We don't do that. Bankers are not doing it. So you have to satisfy these two aspects. After satisfying these two aspects to the absolute satisfaction of your management or to the bank stipulations only, you will take the next step, that is a mortgage. So remember, how do we take an asset? Whatever asset you take as security, number one, you have to find out whether you are the owner, whether the customer is the owner. Then you have to find out what is the value. Then only you have to go for the mortgage. Then creation of charges. Now these are some of the basic things which I want to explain to you all. In banks, in securities, we take securities by various ways. Creation of charges. So we are creating a charge on the security. When we are taking a security, we are not transferring the ownership of the asset to the bank, other than the lease facility, but all the others, we are not transferring the ownership of the asset to the bank. Remember, we are only taking a temporary charge over the asset. We are only taking a temporary charge. If there is a question, sometime back we put a question, name 3 ways in which bank create charges over securities. Name 3 ways in which banks take charge over security. The answer was lien, pledge and mortgage. These are the 3 ways. I will explain to you all. There are 3 ways, there are various ways in which banks obtain security. There are various ways. However, generally, and in common practice, the most important ways are lien, pledge and mortgage. Lien, pledge and mortgage. These are the 3 ways in which we take charges. However, none of the above charges will entitle the bank to have the absolute title over the asset on which such charges are created. However, none of the above charges entitle the bank to have the absolute title to the asset on which such charges are created, because none of the above charges, it's are all temporary charges. We are creating a legal charge so that in case something goes up, in case a customer defaults, we have legal precaution. We can take him to courts. We can file legal action against him to recover the advance. So we are not transferring the ownership. So lien, pledge and mortgage. What do you mean by lien? What is a lien? I'm sure most of you all will know what is a lien. A lien is defined as a legal charge created over a deposit. However, the depositor will remain as the owner of the deposit on which a lien has been created. The bank only creates a temporary legal charge over the deposit as security. So in other words, if a customer comes, if I come to your bank and say, I want to take a facility against my deposit, my fixed deposit, you will ask me to sign a document called letter of set off or whatever it is. So you are creating a temporary charge. You are putting a temporary charge over my deposit. Temporary charge. That is what is called lien. This is a common security, but at the same time, this is a high-risk security. This is a common security. At the same time, this is a high-risk security. So lien is defined as a legal charge created over a deposit. However, the depositor will remain as the owner of the deposit on which a lien has been created. The depositor will remain as the owner. The bank is only taking a temporary legal charge, so that in case of an eventuality, in case a customer defaults, we have a right to uplift the deposit and settle or recover our liability exposure. Why? Because the customer has given a letter of authority, letter of set off. That means, yes, we have created a lien. Is it clear?
So,
Is it clear?
yeah.
Yes. Yes.
Sir, now since we can flip the deposit and recover the facility, why
Yes.
do we may consider it as a high risk this thing?
Yes. Yes. Very good. Very good question. It's a very good question you are asking. It's a very good question you are asking. It's a high risk security because it's a good question. Why I am saying it's a high risk security is because we have come across instances where major frauds have occurred in this security. Am I correct? Major frauds. Major frauds can not 5 million and 2 million. Running into 300 to 400 million frauds have been detected on this security. Why is that? Because when you create a lien, you have to be absolutely certain that the deposit holder has signed the document. Because here what has happened in a few banks, major frauds have occurred. Why? Because they have forged the deposit holder's signature. Deposit holder's signatures have been forged, and innocent people who have blindly witnessed the forgery lost their jobs. So that's why we always say, when you are working in a bank, when you have to witness a document, you have to ensure that the particular customer has signed this document in your presence, because this is a very high risk security, because here you are exposed to a major risk. Major risk. Why? Because the signature of the deposit holder could be forged. It has happened. It has happened in some of the banks. 300 to 400, 500 in one bank. I was told it was 350 million. And the manager, assistant manager, they fled the country. They fled the country. Innocent people who have witnessed the document, they lost their jobs. So you have to be, it's a very good question you asked, very good question, because the general understanding, general tendencies, lien means there is no risk. But as far as I am concerned, there is a major risk. Third party lien, still you have a major risk, because the customer can come and say, say that this is the deposit is held by my mother, deposit is held by my daughter, deposit is held by my wife, she is unable to come. Can you give the document? I will get it signed by them and come back to you. So you give the document, they take it home and they come and give it to you. Or even internally, there are some people may have, this is what happened in some of the banks. So this is why I say, lien, you have to, before you release a loan, you have to be absolutely certain that the deposit holder has placed their signature. Because this security here, most of the deposit holders are senior citizens. Am I correct? Am I correct? Most of the deposit holders are senior citizens. So there is a possibility of such signatures being forged. So remember, whenever you come across such situations, you have to be absolutely certain that this particular customer has signed, he is a deposit holder. Or in isolation, if somebody has got the signature and they come and ask you to sign as witness, don't ever witness it if you are not convinced that the deposit holder has signed the document in your presence. So there are instances, such instances may occur. They'll come and say, no, this customer came yesterday and signed it. So therefore, can you witness it? Don't ever witness unless and until you are convinced that the deposit holder has placed a signature. So therefore, I categorize it as a major risk, because I know the frauds which have happened. I have spoken to the innocent people who have signed as witnesses. When I asked them who had lost their jobs, some of them have come for my classes also. When I asked them, how did you all sign? They said, sir, we didn't know because our manager told us to sign and we signed it. So that's why I am, I have categorized this as a major risk. Is it clear? Do you agree with me, or the person who asked the question?
Yes,
do you
sir. Thank you very much. Yes.
Yeah. Yes. So that is the reason, because based on the personal experience only, I have put that, because young bankers like you all must understand, because you may come across situations. People will come and say, your superior may come and say, can you witness the document? Don't ever witness it unless it is signed in your presence. Then pledge. What do you mean by pledge? In a pledge, now there are three ways the banks create charges: lien, pledge, and mortgage. What do you mean by pledge? In a pledge, the banker is entitled to have its exclusive possession until the debt is settled, and has the power to dispose the pledged asset, although the ownership is vested with the pledger. An asset under pledge could be disposed of without the intervention of courts, provided it does not contravene the terms of agreement. What do you mean by pledge? I'll give you a very good example. Let us assume that I walk into your bank and come and ask you that, I want to import 4 motor vehicles, 4 motor cars, 4 Toyota motor vehicles, latest Toyotas from Japan. I have got the invoice here, sir. I have got the invoice. 4 motor vehicles I am going to import. The total cost comes to about, say, 15 million. For example, I said, so I have got 4 motor vehicles. Invoices I am going to import from Japan. This is the invoice. 15 million. Cost is 15 million. I want to open a LC. I want to open a letter of credit. So when I ask you to open a letter of credit, you will want me to deposit cash, 100% cash you may ask, because I am a walk-in customer. Let us assume that I am a walk-in customer. So let us assume that I am a walk-in customer. I have just gone to one of the banks. So when I walked into that particular bank, I find the branch manager, happened to be a student of mine. We have come across such situations sometime when we walk into some of the banks. There are instances, some people come and help me. And they come and tell me, sir, I have come for your class. I can't remember them, but it has happened to me. So I was very happy, because they come and tell me, sir, can I help you? I have come for your class and all. So like that, here I have gone to a particular bank. When I walked in, the manager recognizes me and says, sir, I have come for your classes. Then I speak to him, when did you come? Sometime like I have followed the class. And what can I do for you? So I said, no, I have come here. I want to open a letter of credit, LC. I want to open a LC. I want to import 5 motor vehicles from Toyota, Japan. The total cost comes to 15 million. I am asking you, don't worry. You are a young people. What will be, if you are the branch manager, what will you do? Will you open the LC? I am a walk-in customer. I may open a savings account later, but will you open the LC? You don't know me. You know me only as a lecturer. Will you open the LC? Will you open the LC? You know me only as a lecturer. Will you open the LC?
So if the settlement plan is clear, we can open the LC, no?
Yes, that's a very good, very good answer. You gave a very good answer. That's excellent answer you gave, because you said if the settlement plan is there, you will open the LC. Excellent answer, because that is the answer any banker will expect. You want a settlement plan. So you will ask me, sir, what is a settlement plan? Very good answer you gave. Settlement plan. You use the correct words. You use the correct words. Settlement plan. So you will ask, what is the settlement plan? Then I will tell you, I am telling you, settlement plan is, I don't have any money to open the, I don't have cash margin or anything. I don't have money to offer as cash margin. But I have got now I am importing 5 vehicles. I have got confirmed orders from 5 people who are also bankers. Then I open my file and give you a document, 5 letters addressed to me from 5 people from various banks. So I said, sir, these 5 people have undertaken, they have confirmed, they are undertaken to buy the vehicle from me. So I am, in fact, in other words, I am importing the vehicle for them because they are bankers. They are working in 5 different banks. They are working, sir, because they have got a staff loan approved, vehicle loan approved. The bank will release a loan. Once the vehicle arrives, the bank will release a loan. So all these 5 people have confirmed. So I am producing 5 letters to you. So I am asking you to open the LC on nil margin. Then once I produce the letter, what will you do? What is the next step you will do? But what's the next step you will do when I show the letter to you? Can you tell me? You will want to see whether these are confirmed orders. Am I correct? You'll want to know whether these are all confirmed orders. So you want to know, because otherwise I can just prepare on a letterhead, I can prepare a letter and come and give it to you. So you want to know whether these are all confirmed orders. So you will ask me, so is it okay if I speak to these people and check whether get a reconfirmation? Because if you tell me, so I'm going to check it, then it may strain the relationship. Then I may ask you, what is this, man? You can't trust me. So you will say, no, sir, can I get a reconfirmation from these people? In other words, you want to know whether these are all confirmed orders, because they can even change their mind after the shipment arrives. So you will ask me, because without my authority you can't ask. You will ask me, sir, do you mind if I speak to these people to get a reconfirmation? I said, yes, you can speak to them. You can, no problem, you can speak to them. Then I speak to all these 5 people. I'm manager of this bank. This so-and-so, this gentleman is here. I just want to get a confirmation whether you all are undertaken to buy this vehicle. So I give calls to all 5 people. All 5 people are telling, yes, sir, we have confirmed. We are buying. We are confirmed to. So you are buying. Yes. Then the settlement plan is clear now. Is it clear? Settlement plan? So you are 100% certain. You are absolutely certain. You have no problem. You are not going to encounter any difficulty in opening, in clearing this LC, clearing the documents. Why? Because all these 5 people are, they are committed. They are going to buy these vehicles from this gentleman. He has negotiated the price with them. So all these 5 people are buying, for which they have got the staff vehicle loan approved from. So I have no problem. So you are opening the LC. 15 million LC, you are open. You are open. You are happily, settlement plan is very clear. You are open the LC. What happens? It takes about 1 hour. Now, of course, you can't importation of vehicle is suspended now. So then after the LC is open, let us assume there is no suspension. So LC is open. Now customer is anxious. I am anxiously awaiting the arrival of the shipment. Just 2 or 3 days before the arrival of the shipment, one particular evening or night when I am watching the TV, I am getting a SMS alert message which says the government, the treasury, has imposed a further increase in the tariff of the duty on vehicles. The vehicle on duty vehicles were 300% or something. So now they have imposed a further tariff tax on these motor vehicles. They imposed a further tax on the motor vehicle. So then when I calculate and see, my God, the original price at which I had negotiated with these 5 bankers, I won't be able to give it to them at that price. Why? Because now with the increase in the duty, the vehicles which are being imported will go up in price. Then what happens? The vehicle shipment is expected within the next 2 or 3 days. So then all these 5 bankers who have undertaken, who agree to buy the motor vehicles, they are contacting me and telling me, sir, we won't be able to buy the vehicle because I understand, because I have got a staff loan approved for this amount, because with the vehicle, with the duty and all. This amount, so now with the new tariff, we won't be able to buy the motor vehicle because I have a limitation in my allocation, because I have got a staff loan approved for this amount. Even with my money, it is not possible for me to buy the vehicles. So we are going to now see, we have to buy a second-hand vehicle in the market, open market, because we won't be able to buy your vehicle. All 5 people have told me, so we won't be able to buy the vehicle. So I am also in a difficult position. But then once the shipment has arrived, documents have come, the bank manager contacts me. And he tells me, sir, your documents have come. You can come and take the documents and clear the vehicles. Then I am telling, I am having a problem. What's the problem, sir, you are having? Because these 5 people who agree to buy are not, now they are not in a position to buy. I am not blaming them, but the government has imposed another additional tariff on these motor vehicles. As a result of that, the vehicle prices have gone up with the duty charges, everything. So they are not in a position to buy the vehicle. They got a staff loan approved for this amount, and with their missing, they won't be able to buy it. Then I tell you, as a branch, as a manager, I am telling you, so don't worry, give me some time, I will find a buyer, because I will put ad in the papers. I will put ad in the papers in Hit and or whatever it is. I will put ad in the Ikman or whatever I can advertise, and I know I won't have any problem in selling the vehicle. Only thing, give me some time. Then you will tell me, so we can't wait till you find a buyer, because you have to clear within 7 days. If you don't clear within 7 days, you have to pay demerit charges to the ports. So there are so many charges there. So you as a bank manager, you want to ensure that it's cleared as quickly as possible. Then you will say, no, sir, we can't wait till you find a buyer. We have to this thing. Then what happens? Then you are offering me a pledge loan. You are telling me, so we can give you a pledge loan. You find your own time. You find your own time. 15 million, we have opened the LC. To clear the document, you need 15 million. We will give you a pledge loan of 15 million. What do you mean by pledge loan? So when you say pledge loan, what happens is, the vehicles which have arrived, the shipment has arrived at Hambantota port, it has to be cleared. So the bank is giving me 15 million pledge loan against these motor vehicles. So how does this mechanism work? One of the bank official will accompany me with my clearing agent or whoever it is, and go to Hambantota. They will also come. One of the bank official also will come with me. So once all these 5 vehicles are cleared, I am taking these vehicles to my residence or to a place designated by me and keep the vehicle there. Once the vehicles are parked there, the bank, you will take possession of the smart key, original key, and the duplicate key. You will immediately take the keys. You will immediately take the key. Vehicles will not be taken to the bank. You will take possession of the keys. Why? Because the vehicle is under pledge to your bank. It is in my residence. I can't drive the vehicle. I can't use the vehicle. Why? You are taking the key, smart key, and the duplicate key. And you will take the insurance also, that later we'll discuss insurance. So in other words, the vehicle is under pledge to you. So you are, now as a bank manager, you have done your part. You are giving me a loan, 15 million loan. You are giving a pledge loan for which you are going to charge interest. So now I have to advertise in the papers, so it takes the process takes some time. After I advertised, I have got 2 people have contacted me and negotiated the price. They say we will buy the vehicle. So I will tell those 2 people, can you bring the money, come and see me with the money at this bank. I am going to this bank. Can you come to this bank at 9:30 tomorrow with the money? So the prospective purchasers, they are coming to the bank with the money. So I go to the bank and say, sir, I have got 2 people who are prepared to buy the vehicle. Then the manager will say, okay, then can you deposit the sales proceeds to your account? We will recover the cost of 2 vehicles. So I will deposit the money to the account. Bank will recover the cost of 2 vehicles, and then they will give the keys of these 2 vehicles. So then I take these people to my residence, clear 2 vehicles, and 15 million loan is also reduced substantially by the sales proceeds of these 2 vehicles. Then, out of the 5 vehicles, 2 cleared, still I have 3. So like that I had to find out. So the vehicle is under pledge. This is what is called pledge. In a pledge, the banker is entitled to have its exclusive possession until the debt is settled, and has the power to dispose the pledged asset, although the ownership is vested with the pledge. An asset under pledge could be disposed of without the intervention of the courts, provided it does not contravene the terms of agreement. So I have given you a good, simple example, but this could be the same pledge facility could be given for a variety of reasons. Now I can tell you another good example. There were some questions on pledge loans also in our banking credit diploma courses, the exams. Let us, I have shared this at various forums. I'll give you a good example. Let us assume, a welder, a person who is involved in welding. He comes to your bank. He's a welder. He comes to your bank and says, sir, I want to take a loan of 1 million. Then you may ask, why do you want 1 million? You say, I am making this remote control gates. So I want to buy some raw material. I have got 3 orders. From various people. So I negotiated with them. I am going to sell them the gates for these 3 people. But for these 3, for which I need, say, let us assume he says, I need 5 lakhs. If he comes and tells, I need 5 lakhs loan to buy raw materials to make these gates. You as a banker will be reluctant to give a loan to this welder, because the welder, he doesn't have any, there was a question on this. And there will be a question on this again in this particular exam also. So this welder, he doesn't have any security to offer. No, he has any cash flow to show, no any past performance, nothing. Only he has a technical knowledge to make gates, 3 roller gates, remote control gates, for which he wants 5 lakhs. So you as a banker will be reluctant to consider granting a loan for him 5 lakhs, because he is unable to give a security. But now the government wants to promote this SME sector, small and medium scale entrepreneurs. They are a very vulnerable set of people. They are unable to go to a bank for a credit facility because banks are reluctant to grant them credit facility. Now the government, even the previous government, they made it compulsory for the bankers to grant 10%, or I can't remember the percentage, 10% of their portfolio, whether you like it or not, should be channeled to SME sector. 10% of their portfolio should be channeled to the SME sector. Now, under the present situation, the government has gone one step further, and they have told the banks, they have to grow their existing SME sector by a further percentage of 20% every year. So that means SME portfolio should grow every year by a further percentage of 20% every year. Why? Because the government wants to promote the SME sector. So now what happens is, if the bankers are more comfortable in granting a loan to a professional for him to buy a house, say 5 million loan they grant to a professional to buy a house or an apartment, so that your repayment is to some extent it's guaranteed. So the bankers are reluctant to help this sector. So when you come across such sectors, you can always grant them a pledge loan. Now I have written an article on this. I will show you in my for the final sessions on SME, or if you want, you can WhatsApp your what do you call it, your number. I can even send you that particular article. I think it is available in the IBSL what do you call it, notes. So you may come across situations like this. So if the welder comes to you, a bank, and asks for a loan of 5 lakhs, you can grant him a pledge loan. You can grant him a pledge loan. That means you will grant him a loan of 5 lakhs, and you will ask, like this person, where you ask for the vehicle confirmed orders, you will ask the welder, from where are you going to buy these raw materials? So I will produce, the welder will produce a list of raw materials, suppliers, then you will channel the money direct to the supplier. You will release the money direct to the supplier, then you will have to carry out inspection. So you will have to closely monitor, because the reason is you will not credit the 5 lakhs to the welder's account, because they are a very vulnerable set of people. They will not, if the money, all of a sudden they get 5 lakhs into their hand, they may go and utilize it for some other purpose. They may go and buy a 55 inches TV instead of manufacturing the gate. So this, because of that only, we don't want to grant the money, channel the money direct to the welder's account. We will ask the welder to submit the details of the suppliers. So we will release the checks direct to the supplier. Even after releasing the money direct to the supplier, we will carry out an inspection to ensure whether the raw materials have been delivered. Why? Because even after releasing the money, the welder can negotiate with the supplier and give him a commission and get the money back. So to avoid such situations, we will have to carry out an inspection. We will tell the welder, okay, we are giving you the check. When do you think you will get the raw material? He will say, no, tomorrow they will deliver it. So once the raw materials are delivered, please let us know. We want to carry out an inspection. So you will carry out an inspection to ascertain, to confirm that the raw materials have been delivered. Then you will ask the welder, how long will you take to make these 3 gates, 5 or 3 gates? He will say, so it will take about 2 or 3 weeks. Then you have to carry out periodical inspections to see, to ascertain, to assess the work in progress. Once that is done, you will find out from the welder, who are the people who are buying the gates from you. This you should ascertain at the very outset before releasing the loan. So you have done that also, let us assume that you have done that. Then you will ask the welder, he will say, I have manufactured 1 gate, so why don't you supply this 1 gate? So he supplies that particular gate, then you will ensure the money comes there. So, here the process, the monitoring process has to be done by you. So see the amount of employment which could be generated by the welder. He will obviously have to employ some people. So that's the reason the government wants the bankers to help these people. So like that, you may come across situations like this where a welder, let it be a welder, not only a welder, person who is involved in a catering business. Now today you find a lot of people who have started this catering business. Like, a lot of people there are who have started, well-to-do people, they have started this catering business because that's a very good business for them. So like that, if they come to your bank and say that we want to buy certain, we want to modernize our kitchen, they come and say we want to modernize our kitchen, for which we need 5 lakhs to buy certain kitchen equipment. So you can grant them the facility. So all these are known as pledge loans. So the what you call now here, the builder who is who has sought a facility from your bank for 5 lakhs to manufacture the gates, you are granting him a loan. That loan is the pledge loan. The raw materials are under pledge to you. The finished goods are under pledge to you. But here the difference is you have to carry out periodical inspection to ensure that the welder is doing his job. If you relax, the chances are there for the welder to utilize it for some other purpose. So this is the way you grant loans to help people who are involved in SME sector. Now here I want to ask you a question. In this particular, take this welder's case. What is the risk you have in this particular welder's case? Can you all tell me? You know, as a branch manager, you are 100% sure your advance is safe. Whatever happens, the welder will ensure that he pays a loan. Why? Because you are behind the welder, your officials are following up, they are carrying out periodical inspection, they are going and disturbing him and asking, how long you have gone? Now I will be finishing one gate tomorrow. Once it is ready, you must install it. So like that, the close follow-up will ensure your advance is safe. But there is one risk here. Can you tell me what is the risk? What is the risk? There is one risk here.
So generally, pledge goods are under lock and key. But in this case, the work in progress, raw materials, or the finished goods are not under the control of the bank.
Yeah, that's right. That's a very good, here again, that's a very good question. It's under lock and key. But here you can't have it under lock and key because the reason is for the manufacturing process, he needs the raw materials. That's why we have to carry out periodical inspections. Am I correct? Because you can't keep it under lock and key. So, what you can do, this is a very good question. What you can do is either you can keep all the raw materials in his stores under lock and key, and you can tell the welder to manufacture one gate. What are the raw material you require to manufacture one gate? Then you can release those raw materials only to manufacture one gate. So that decision, that is at your discretion. Very good question. That is at your discretion. So if you keep the whole thing under lock and key, he will find it difficult to start his manufacturing process. So either you can release the raw material required to manufacture to make one gate, or you can release the entire thing, for which you may have to carry out periodical inspection. Is it clear? Is it clear? Is it clear? Are you satisfied?
Yes, sir.
Yes. It's a very good question. It's a very good question. Pledge loans, we always say it has to be under our lock and key. But here in this case, we can release the raw material required to manufacture one gate, or we can release the whole thing on condition that we carry out periodical, regular inspections until the gates are made and installed at the purchaser's residence. So you have to carry out periodical inspection. Pledge loans, we have to carry either under lock and key or close monitoring and supervision. So you can grant these type of facilities, pledge loans, for various type of customers who are involved in SME. There are a lot of people like that. Even in our banking life, I can share with you all. In our banking life, we are come across several people like this. Today, they are multi-billionaires. I don't want to mention the name because everything is recorded here. There was one customer. We granted him. I was instrumental in granting him a loan of 50,000 rupees. I was instrumental in granting him a loan of 50,000 rupees. Today, this customer has about 500 vehicles. His company has 500 vehicles. And you go to supermarket, their product is a very well-known product. I can't disclose the name because it is recorded. Well-known product. There's another customer. We granted him a SME loan, 50,000 rupees. This customer always used to come in a motorbike. And every month we had to carry out an inspection. The days we carry out an inspection, he used to come in a bus and waits in the bank till I finish my work. Then in a bank vehicle, I used to take him. Today he has established outlets in most of the South Asian capitals. He has opened up outlets, and sometime back they celebrated their 25th anniversary, for which there was a supplement in the papers. I think English paper. I'm sure it was. They would have published in Sinhalese newspaper also, the Daily News, 2-page supplement with their entire staff. For that supplement itself, I am sure he would have spent about 2 million rupees. For the supplement itself, I am sure he would have spent about 2 million rupees. So when I saw the supplement, I was very happy because, here is a person who has started with our bank and we have helped him. Then when I saw the supplement, then I was determined to speak to this gentleman. Then I, dialed the company's number. I got the number from this thing and dialed. I asked for this customer. Then it was transferred to various channels. Ultimately, it went to one lady. She asked, can I speak to so-and-so? She asked, may I know your name? I mentioned my name and I said, I am from HNB. Then the call was transferred. And this customer spoke to me. And I told him, today I'm speaking to you because I saw your supplement in the papers. And I'm very happy to know that you are doing very well. Then he said, yes, sir, I'm very nice to hear your voice. We are here. Today we have come to this stage because you all have helped us. And he said, you all have helped us with a small loan. And today we are successful businessmen. We have established branches in some of the capitals, South Asian capitals. So like that, what I'm trying to say is these people also, we gave them, these are true stories. These are true stories. These are the two customers which comes to my mind. There's another customer. He also has come up in similar ways. So these people are all well established. So how did they start? Now today, these people they are employing, each customer is employing more than 500 to 1,000 people in their payroll. So if the banks were reluctant, government has intervened. They want this sector to grow. Now they have gone one step, and they have made it mandatory for the banks to ensure that you grow your SME sector by 20%. Every year you grow your SME sector by 20%. So when I want to ask you a question. When you are granting a loan to this welder, what is the risk you have? There is no risk as far as you are considered, because you are granted the loan. You are going to carry out periodical inspections. You are going to carry out periodical inspection. If necessary, every other day, you will carry out inspection at the customer's workshop, factory or workshop or whatever it is. What is the risk you have? You have one risk. Can you tell me what is the risk? You are faced with one risk.
So if something happens to the customer?
That's right. If something happens to the customer, what happens? How are you going to mitigate that? If something happens to the customer, how are you going to mitigate that? Can you all tell me?
Can you get an insurance?
Very good. Very good. You will take an insurance. Very good answer you all gave. If something happens, that is the only risk you are facing. Because here, if something happens to this particular customer, which is beyond your control, this customer may die, due to natural or due to some accident or due to some problem. If he dies, then your advances, your advances exposed to a major risk. So how do you balance that risk? You will balance that risk by taking an insurance cover. I will explain insurance later. So is it clear to you all what is pledge? Is it clear? You can always grant pledge
So
loan.
there is a risk of defaulting also, no? Because we
Yeah,
don't
that's
have
right.
control over
Yes.
the inflows.
Yes, that's right. Very good. You are facing the risk of default. That is the reason why I wanted you all. I stressed the importance of ascertaining the confirmed orders before releasing the loan of 5 lakhs. We have to find out who are the people who have who have negotiated with him to buy these gates.
So confirm order maybe they are, but we don't have a control over the payments, no, sir?
No, that's right. That's also a very good question. We don't have a control over the payment. So to overcome that risk, but there is a mechanism available with you. How will you overcome that risk? There's a mechanism available with you. You have got the confirmed orders. You have got the confirmed orders from 5 or 3 people. 5, let us assume 3 people who have agreed to buy the gates from them. But still, it's a confirmed orders. How will you overcome that? How will you overcome that?
We can directly pay the
That's
buyer.
right. That's right. You can go one step further, and you can get the confirmation from these 3 people who have agreed to buy the gates, to give a confirmation commitment to the bank that they will pay the sales proceeds of these gates direct to the credit of this customer's account in our bank the moment the gates are installed. The moment the gates are installed. Am I correct? Once the gates are made, once it is installed to their satisfaction, they are giving you a confirmation. So they are giving you, sir, we will ensure, we hereby confirm that we will credit the proceeds of the sales proceeds of the gate direct to the credit of this customer's account with your bank. So that is a mechanism you available at your disposal. Is it clear? Is it clear? Any questions on that? You know,
So
you can.
there,
Yes. Yes, miss. Yes.
so there may be a risk to the raw material also. If something happens or if the raw material has been stolen.
Yes, that's right. That's also another very good question. Very good question. So how do you overcome that? You would have taken an insurance cover. You would have taken an insurance before releasing the raw materials to the. It's a very good question. You know, I am very, very happy because I find a lot of talented, intelligent people are in this audience. I'm very happy because it's very interesting. You asked a very good question, miss, because the raw material could be stolen overnight. How do you overcome that? Insurance. So before we release the raw materials, we will tell the customer that he should have an insurance cover covering the machinery, the tools what he is having, and also the raw materials. So he must get that insurance cover. Not only the insurance covering his life, that also will insist, but prior to the release of the raw material check to the supplier, we will ask the customer the question what this lady asked. What is the precautions you have taken to avoid such an eventuality, because the raw material could be removed overnight. So he will say now, especially at this time during the lockdown, robberies are, on the high. There are especially people are finding it difficult to survive. So as a result of that raw material, so, the burglars are very active, because you can't blame them, because they are finding it difficult to survive. There are about 22% of the workforce are people who are dependent on daily wages. So when they are unable to survive, the robberies can happen. So you will ask the customer, what is the precaution you have taken? He said, don't worry, sir, I have taken all the precautions. But still for all, we will have to get an insurance covering the raw materials, finished goods, and the equipment what he is having. So that is one of the conditions. Pledge loan, even that motor vehicles, before they granted a loan to me for the release of the motor vehicle, I should have produced an insurance cover to the bank to confirm that I have got an insurance cover covering the vehicles, covering all 5 vehicles. Similarly, here also the welder will have to get an insurance on the welder. I am sure he won't have insurance, but as a bank, we will insist on an insurance cover through the bank. We will get an insurance cover assigned jointly to the bank and the customer, so that in case if the raw materials have been removed, burgled, if a theft occurs, we are in a position to recover it. Is it clear, miss? Is it clear?
Yes, sir.
Is it clear? Yes. Very good question. Even I have not thought about it. Very good questions. All the questions what you all asked are very valuable, very important questions, because the raw material. So before we remove, before we release a check, it is one of the conditions we will tell the customer. Before we release a check to the supplier, you have to get an insurance covering the raw materials. So once that is done, then the gates are being, the manufacturing process is on. He is in the process of making the gates. So here you have to make regular inspection. That's what we say here. These type of people are very, very vulnerable. Even after the raw materials are released to them, they can still go and sell the raw materials. They can still go and sell the raw materials. That is the reason why we say close inspection, follow-up inspection is an absolute necessity until the gates are delivered and installed and until the advance is recovered. So the only risk in case something happens to him, we are mitigating that risk by taking an insurance cover. Is it clear to you all? Any other questions? Is it clear? Have you got a proper idea of pledge loans? Is it clear to you all?
Yes, sir.
Yes. So pledge loan is the way forward. SME is the way forward. So you may come across situations like this where you will be required to grant a pledge loan. So I have written an article. It was published in the Daily Financial Times. I think it is available. If you want, you can send me this thing. I will forward that article to you, because that, in a nutshell, everything is clearly explained, and there will be a question on this. So we have discussed about what is lien. We have discussed about pledge. So I have given you good example. Now you all raised some of the concerns, very valuable concerns which you all have raised, very valuable concern which I have explained to you all. Is it clear to you all? Can we go to the next one? Yes.
Can you please explain to us about this loan to value pledge?
Loan to value pledge. What is the loan to value pledge?
I have heard the term like that, even I don't have any idea about it.
Loan to value the pledge. But I think what they say is you pledge consignment of stocks to cover the loan. I think that's what they are meaning when you say you have adequate stocks, stocks or assets to cover adequate value of assets which are pledged to cover the loan amount. Is it clear, miss?
Yeah, yes, thank you, sir. And the other question, sir,
Yeah.
When we take this insurance, sometimes they say that it is only for the debt recovery at an incident of a death of a person.
Yeah.
And the other times they speak about an insurance where it covers the loan in any way, any kind of a default. So these insurance...
Now, insurance, now I will explain there's another session on insurance. At that time, I'll explain this in detail. But anyway, to answer your questions, can you repeat the question again, miss? Can you repeat the question again?
No, sir, no. Sometimes the insurance that we have taken will pay us only at a default as a result of a death of a person who have taken the loan.
Yes.
And sometimes they talk about something like whatever the reason which will lead to a loan default, they will cover it.
No,
So
actually, insurer will not cover for any default. No insurance company will give you a cover to mitigate default. Am I clear? Is it clear, miss?
yes,
No,
yes, sir.
no insurance company, insurer will give you a cover to cover a default. They will give you an insurance only to cover the life of the policy holder. In this case, the welder. If now we ask the welder to get an insurance cover, he will get an insurance covering his life. That means in case of death of the welder due to natural or accident or whatever, the insurer will pay. In addition to that, there is a disability cover. That means if the welder meets with accident or if he is disabled, or if he loses his vision or something happens to him, he is unable to perform his duties, insurer will cover. So the life insurance cover will cover the the insured's, that means the welder's life, and also a disability clause. That means we had to get a disability clause. We had to ask the insurer whether there is a disability clause, because in the welder they are constantly, their eyes are exposed. Am I correct? Exposed. If something happens, if something happens, he will not be in a position to execute or work or do his work. So he is disabled. So the insurer will give a life insurance cover. At the same time, you have to ask the insurer whether the disability clause is also there. So that is what is called a life insurance policy. In addition to that, to answer your question, you can explore the possibility of getting a term decreasing cover. That is a mortgage, something like a term decreasing cover. If you are giving a loan of 5 lakhs to the welder, you ask the welder to get a term decreasing cover. That means if you say term decreasing cover, in case if something happens to the welder, the insurer will pay whatever the amount which is outstanding. It's supposing the welder, something happens to the welder, let us assume the welder has met with the accident and he has died. Then you have granted him a loan of 5 lakhs, the outstanding is 3 lakhs. So the insurer will pay whatever the outstanding, the insurer will pay. That is what is called term decreasing policy. Term decreasing policy that is taken for the benefit of the bank and to ensure that the dependents are free of any encumbrances. So they will not pay for any default. They will pay in case if something happens to the welder, they will pay. That is, there are two policies. One is term decreasing policy. One is the life policy. Now, if I ask you a question, you are the branch manager, you are the credit officer. If the option is given to you, which one you prefer? Do you prefer the life policy or do you prefer the term decreasing policy which guarantees the payment of the outstanding? Which one you will prefer?
The term decrease.
I think term decreasing policy.
Term decreasing policy.
Term
Term decreasing, yes.
Yes. You all are saying term decreasing policy. Very good. But if you ask me, I will go for the life insurance policy. I will go for the life insurance policy. Why I will go for the life insurance policy? Because the reason, sorry? Yes. Somebody said, yeah, very good. Yes. I will go for the life insurance policy. I am motivated. I am motivated in going for the life insurance policy for two reasons. Number one is premium. Because the premium on a mortgage, on a term decreasing policy, the premium on a term decreasing policy will be very high. Let us assume for a loan of 5 lakhs, the insurer wants a premium of 25,000 rupees. I don't know the exact amount. Let us assume 25,000, which is a very high amount for the welder. So still he is paying the 25,000. So let us assume he has paid 25,000. Now you all wanted to go for a term decreasing policy. He has taken a term decreasing policy for 5 lakhs and given to you. Let us assume he has successfully paid the loan on the due date. Your loan is repaid on the due date, no problem. Then what happens? The 25,000 rupees, what he has paid to you, paid to the insurer, is a waste. It's a waste. He has paid 25,000 to the insurer as one single premium to obtain the term decreasing policy to cover the loan. So the premium what he has paid is a waste. Why? Because the customer has not died. He has survived during the loan. Even the loan is prepaid, he is still living. So the money what is paid is a waste. But on the contrary, if I have taken a life insurance policy, even though the loan has been settled, still the life policy is in force. So the money, if I take a life policy of 5 lakhs, that life policy on maturity, the money of the 5 lakhs will be for me. And the premium is every month I have to make a small premium. In addition to that, in the life policy, if the customer has died or if the customer dies due to accident, if the life policy with some accidental benefits, the cover gets doubled. Now, if you ask an insurer, if the life policy is with accidental benefits, when you say accidental benefit, what they say is, in case if the customer dies due to an accident, the sum assured gets doubled. The premium of the amount of life policy 5 lakhs, and if the customer dies due to an accident, the cover gets doubled. So the insurer will pay 1 million. Or if he is permanently disabled, the cover gets doubled. Apart from that, even after the loan is settled, the life policy of 5 lakhs will be in force, and the insurer, the customer will get the full amount, full benefit after the repayment of the final premium. So these are the two options you have. Do you agree that you will go for a life policy or a term decreasing policy? Now,
so there's an issue like this. Now, a mortgage protection, the life credit loan protection policies, the premium is one-off, right?
That's what I'm saying.
In a life insurance policy, that to keep that in force, you have to pay the premium every month.
That's
Let's say a loan is granted for 6 months, so we have to ensure that client is making the insurance premium throughout the period. Otherwise, it will get.
That's right. That's a very good question, because in the life policy there's a risk, because here, as you said, it's a one-off premium. At the very beginning, and he pays a premium of 25,000 one-off, and we take the life policy, the term decreasing policy, and we are keeping it. So in a life policy, as you correctly said, there's a risk of non-payment. So that is to avoid such situations. It is one of the conditions. We tell the customer the premium on the life policy should be paid through the bank. To avoid the life policy, because two scenario here, term decreasing policy, one premium you pay, that's the end of the story. There's a risk the customer may default. So to avoid that, we will ensure that the premium is routed through the bank. That means the bank takes the responsibility to remit the premium every month or every quarter to the insurer through the customer's account. So now when we are recovering the loan installment, something like that, we will tell the customer he'll have to deposit funds to meet the premium on the life policy. That we will monitor, because if you give that responsibility to the customer, he may default. So we will ensure, it's one of the conditions, we'll have to see that the premium is routed through the bank. So even if there is no funds in the account, we debit suspense account and remit the premium. So here we are doing periodical constant monitoring. At the same time, the payment of insurance premium is also our responsibility to ensure the premiums paid on the due date through the customer's account to ensure the policy is in force. Is it clear? Is it clear?
Yes, sir. Thank you, sir.
Yeah. So now the life policy, the risk involved in the life policy also, I have cleared you all. Is it clear to you now? Is it clear? Premium of the life policy?
Yes, sir.
Yes, sir.
Yeah, very good. Good questions you are asking. I am very happy about it. So now we are coming to the next one, the mortgage. 3 ways in which bank takes security. Now the insurance, I will give you further, we will discuss it later when we touch on the insurance aspect of it. Lien, we have discussed, you all asked what is the risk involved in the lien. I explained to you all. Pledge, I explained to you all in detail the pledge, because motor vehicle and although in a pledge the goods and the raw materials should be under lock and key. If we keep it under lock and key, the customer will have to, he also need the raw material to manufacture, so we can go and release the raw materials. Step by step we can release raw materials, or we can release the entire raw material at once, but the responsibility is on your shoulders to ensure the raw materials are intact. Then there was another question asked whether the raw materials could be burgled, stolen. Very good question, for which we have an answer. We have taken an insurance cover. Now we are coming to the next important area, mortgage. This is a very important area, because when you say mortgage, when you are if you are working in a credit environment, this is a word which you will hear very often. Lien, pledge, and mortgage. These are words which you all will hear very often. What do you mean by mortgage? I'm sure all of you all will know, but anyway, still for all, for the benefit of the people, some of the people who may not have heard about the word mortgage. Under a mortgage, the mortgagee, that is the banker, has special interest on the property mortgaged, while the title and the ownership remains with the mortgager. Unlike in a pledge and lien, here under a mortgage, the mortgagee, that is a banker, has special interest on the property mortgaged, while the title and the ownership remains with the mortgager. Now, lien explained to you all, pledge explained to you all, mortgage. Now we are on the subject of mortgage. Under a mortgage, the mortgagee is, that is the banker, has special interest in the property mortgaged, while the title and the ownership remains with the mortgager. Now, when you say about mortgages, you all must understand there are 2 types of mortgages. Here only most of the bankers, some of the bankers, there are instances, they may miss this. Fixed mortgage, floating mortgage. What are these fixed mortgage? What are these mortgages? What do you mean by fixed mortgage? A fixed mortgage will secure a particular liability and will cease after the fulfillment of the obligation by the mortgagee and cannot be enforced for any further advance. Remember, because there may be questions on this, I am talking to you all today after setting the question paper. So I must tell you all, I am talking to you all today after setting the question paper. So slip of the tongue, some certain things, questions may come out. So listen to each and every word, but I speak very carefully, because there may be a question on fixed mortgage also. What do you mean by fixed mortgage? A fixed mortgage will secure a particular liability and will cease after the fulfillment of the obligation by the mortgagee and cannot be enforced for any further advance. That means secures a particular liability. Let us assume I come to your bank for a housing loan. I am mortgaging my house and property, valued at 5 million, and I am asking you to give me a loan of 2 million. You are giving me a housing loan of 2 million to be repaid within 15 years. Why? I have mortgaged my house. You have mortgaged my house and given me a loan of 2 million, repayable in 15 years. Listen to this very carefully. Repayable within 15 years. So I am taking the loan. 2 or 3 months or 4 months or 6 months after taking the loan, even though you have granted the loan to be repaid in 15 years, I have got some money. I have sold one of my lands. I got my money. So I find what's the point in having this money, because now the fixed deposit rates have come down. So I am interested in settling the loan. I come to the bank and I tell you, sir, I want to settle my housing loan. So you will ask me, today bankers don't want customer to settle the loan because customer wants to settle the loan. We will ask questions, sir, why do you want to settle the loan? So here you are asking me, why do you want to settle the loan? I said, no, I want to settle the loan. Even though you are granted the loan to be repaid in 15 years, I want to settle the loan. So I have deposited the money, you have settled the loan. Loan is settled in full. Balance is zero. So with the settlement of the loan, the mortgage which you have executed to secure my loan, if it was a fixed mortgage, that mortgage also gets cancelled. That mortgage becomes null and void and cannot be used for any further advance. Why? Because the mortgage which you have executed is a fixed mortgage. Let us assume, let us take a practical situation. Let us take a practical situation. You are the branch manager. I have come to you for a loan of 2 million. You have granted me a loan of 2 million, for which I have given a land and I have given a house and property worth 5 million. 15 years to be repaid in 15 years. Loan is settled. Once the loan is settled, I am telling you, don't cancel the mortgage. These are practical situations you may come across. I am telling you, don't cancel the mortgage. Then the title deed documents, keep it. I will take it later. Don't cancel it. Just keep it with you. I will take it. So you said, okay. So I have settled the loan and I have gone, but I have not taken the documents back. I have not taken the mortgage back. I have not told you to cancel the mortgage. I told you, no, sir, don't cancel the mortgage. Keep it. I will take the documents later. So my loan is settled. Loan 2 million, which was granted for a period of 15 years, I have settled within 1 year. Within 6 months, I have settled. But I have not taken the documents back. I have gone. What happens? After some time, after settling the loan, there was a necessity has arisen for me to avail the assistance of you for a further loan of 2 million, because I have come across another land which I am interested in buying. So I am short of 2 million. I rush back to you. And I am telling you, sir, I have, I took a loan of 2 million. Can you remember last time? I settled it in full. You granted the loan for 15 years. I settled it in full. Documents are still with you. I want a fresh loan of 2 million because I want to buy another land. I am short of 2 million. Can you give me a loan of 2 million? You will have no hesitation in giving me the loan, because earlier loan, although it was given for 15 years, I have settled within 1 year. So you will check from your document, from your system, from your computer, from your customer profile. You are checking and seeing. Your screen will show. You are checking. You click the button. It shows he has taken a loan of 2 million earlier. On this date, he has settled it, but he has not taken the document. So I am telling you, documents are still with you, sir. So you find from the system, documents are still with you. Documents have not been, the mortgage has not been cancelled. So you say, okay, the documents are still there. I am granting you, I will give you a fresh loan 2 million. You are releasing a fresh loan of 2 million. If you do that, what happens is, the mortgage which I have executed at that time was a fixed mortgage, and I have settled the loan. So in other words, after settling the loan, you have granted me a fresh loan. You have given me an unsecured loan. Because why? That particular mortgage which I have executed in your favor was a fixed mortgage. So you have simply checked from your system whether the mortgage is there. Mortgage is there, but you have not gone deep into the matter to find out the type of mortgage, which was a fixed mortgage. So you have granted me a loan of 2 million. In other words, you have given me an unsecured loan. You have granted me an unsecured loan. So that is what is called fixed mortgage. On the contrary, if that particular mortgage, if that particular mortgage was a floating mortgage, if that particular mortgage was a floating mortgage will enable the bank to grant a series of advances within the specified limits of the bond, and it also permits the continuation of the advance within the limit. When you say a floating mortgage, will enable the bank to grant a series of advances within the specified limit of the bond, and it also permits the continuation of the advance within the limit. So in other words, if that particular mortgage which I have executed was a floating mortgage, that mortgage is valid until its cancellation. But if it's a fixed mortgage, that mortgage will get cancelled with the settlement, with the liquidation of the loan. Is it clear to you all? Is it clear? So always, whenever you are granting a fresh loan to a customer, whenever you are granting an enhancement to a customer, you have to check and see the mortgage which you have created over a particular asset to secure that particular advance is a floating mortgage or a fixed mortgage. If it is a fixed mortgage, that particular mortgage automatically gets cancelled after the settlement of the loan. But if it's a floating mortgage, that mortgage is valid forever. That's what I gave you an example where the branch manager sits in front of the computer. Customer comes and tells him, sir, I have taken the loan earlier. I have settled the loan within 1 year. He checks the system. System says mortgage is still there. System says mortgage is not cancelled. System says mortgage is intact. Then the manager grants me a fresh loan without going into the matter to ascertain, to find out whether that particular mortgage is a floating or fixed mortgage. If it was a fixed mortgage, you have granted me a unsecured loan. Is it clear to you all? Is it clear?
Yes, sir.
Is it clear? Yes. Now let me ask you a question. If you are the branch manager, you have approved a loan to a particular customer, 2 million against a mortgage of 5 million. Let me ask you, you are writing to the lawyer, branch lawyer or the legal officer, simply asking him to execute a mortgage over immovable property. The branch lawyer writes to you back and asks you, I have got instruction from you to execute a mortgage for 2 million. What is the mortgage you want me to execute? Because you have not made that clear. Do you want a fixed mortgage or do you want a floating mortgage? What is the reply? What will be your response? Can you tell me? What will be your response?
It should be a floating mortgage.
Floatings.
Yes, very good. You will be advising the lawyer to execute a floating mortgage. You will always advise your bank lawyer to execute a floating mortgage, because if you execute a floating mortgage, it is beneficial to the bank. But if you don't use the word floating, and if you are just told the lawyer to execute a mortgage, lawyer will always go and execute a fixed mortgage, because fixed mortgage is beneficial to the bank branch lawyer, because they know very well fixed mortgage cannot be used for any further advance. So therefore, they will always prefer to execute a fixed mortgage if you don't advise. So remember, you must use the word floating. You will always execute, you must always advise a branch lawyers to execute a floating mortgage. Normally, generally, when we are granting a loan, we don't ask the customer, sir, what is the type of loan mortgage you want? Do you want a floating mortgage or fixed mortgage? We don't ask the customer. But sometimes what happens is, in some other banks, the legal officer will send a draft mortgage to the customer for acceptance. It happens. Sometimes the legal officer will send a draft mortgage. The legal officer, after preparing the mortgage bond, she will send a draft mortgage to the bank to send it to the customer and get the customer's concurrence. So you may send it to the customer to get this concurrence. Sometimes certain customers, lawyers will go through it and they will say, no, why do you want to give a floating mortgage? You give a fixed mortgage. So that type of situation also may happen if you write to the customer and get the customer's concurrence. But as bankers, we always prefer a floating mortgage. So remember, floating mortgage is always, it is advantageous. It's advantage to the bank and is beneficial to the bank. So remember, when you are called upon, when you are in the sent to a particular branch as branch manager, or you are a credit officer, if somebody comes and tells you what is the security, there is existing mortgage, don't ever release the loan without ascertaining what is the type of mortgage. Now, before I explain to another one, I want to ask you all, do you want me to stop for 5 minutes? I can continue. For you to
small question.
Yes.
So if it is for housing purpose, can we instruct the legal officer to execute a floating mortgage?
Yes.
But the thing is, for housing purpose, the stamp duty we charge is somewhat lesser than the other mortgages. No? So customers not allow us to execute floating mortgages for housing purposes. It should be a fixed mortgage.
What is that you are telling? Housing loan? What is the stamp duty on housing loan? But I don't. It's the same, no. Stamp duty on mortgage. There is no difference between housing and normal loan. Same stamp duty is applicable. Only in 2001, the then UNP government gave some concession for housing loans, mortgage, but that was revised. So as far as mortgages are concerned, there is no difference in the stamp duty for as far as housing loans are concerned. What's the next thing? Next question you said?
The rate also, now the housing loans generally we charge a flat rate or the fixed rate for the total tenor, but other loans, it's floating rates.
Yeah,
so when we
you are referring to the rate of interest.
That's right. Yes.
Right. That's right. Rate of interest. So, but how will it affect the mortgage?
So, if it is a fixed mortgage, generally for housing purposes, we give them a fixed rate. Sir.
Right.
For others, it's floating rates.
Right.
So, when we insert that close into the mortgage bond, the next time when we use that mortgage fund, some other facilities, that clause cannot be changed.
No, but in the mortgage bond, there is also a clause which gives the right to the bank to vary the rate of interest. So you don't have to worry about that. In the mortgage bond, although we may put the rate as 10%, there is also a clause which gives, there's a flexibility clause which gives the bank the right to revise the rate of interest if circumstances warrant it. And at the same time, when we are granting additional loan, that will be followed. That will be followed with a letter of offer where we will give the rate of interest. Am I correct? Because in the mortgage bond, also there is a clause which gives the comfort to the bank to revise the rate of interest in case the situation warrants. And this, in addition to that, when we are granting additional loan, for that loan, we will also give the customer a letter of offer and letter of acceptance where the rate of interest will be very clearly stated and the existing mortgage details also will be given. Am I correct? Is it clear to you? Or is
in offer letter, we state that clause.
That's right, yes. Offer letter, we will be saying that. In the offer letter, we will say security existing mortgage number dash over immovable property, and then the rate of interest also we will be giving in the letter offer, which when the customer signs, it becomes a letter of acceptance. It's clear? It's clear?
Yes, sir. Yes, sir.
Yeah. So now, can I
Yes, sir.
adjourn for 5 minutes for you all to have your, do you all want 5 minutes or you all want me to continue? So now we were on the subject of fixed and floating mortgages. Now, on the same subject, as when I asked you all what is the mortgage you all prefer, the answer you all gave was floating mortgage, which is the correct answer. So normally generally we don't ask the customer when we are granting a loan to a customer, we don't ask the customer, your loan is okay, what is the mortgage you want with a floating or fixed, we never ask, because as far as the customer is concerned, he wants a loan. But since sometimes banks, the legal division or the branch lawyers give a draft mortgage, so we are supposed to send the draft mortgage to the customer, and we get the concurrence of the customer whether he is agreeable to the draft, because that is normally that is the way in some of the banks what they do is the draft mortgage is given to the customer and also to the bank. So the customer has to sign the mortgage saying draft saying agreeable. Then the bank also has to say agreeable. After that only they send it to the legal department, after which they execute the mortgage. So generally, in most of the bigger banks, this happen, but sometimes due to the time limit, sometimes some banks, they don't get the concurrence of the customer. Straight away, they get the mortgage bond signed by the customer. So when we are sending the draft mortgage bond to the customer, bigger entities like leading corporate entities, what happens is they give it to their lawyers, and sometimes their lawyers will go through it and say, no, this is a floating mortgage. If you sign this thing, you will have problems. So we'll go. So it's a very remote possibility. Sometimes that type of thing also happens. So if a customer says, I want fixed mortgage, then we can't help it. But always our preference is floating mortgage. Now I'm going to ask you another question to test your knowledge. We can execute floating mortgage covering any asset which is offered as security. That is our preference. But there is one particular asset. We do not create floating mortgage. We always create a fixed mortgage. Even though you like it or the customer may like it, we always take mortgage over a particular asset. We always go for fixed mortgage. Can you all tell me what is this asset? We create mortgage.
House.
Sorry?
Housing.
No, not housing. Not land. No, one particular. When you say floating mortgage, I'll give you a clue. When you say floating mortgage, it implies, when you say floating mortgage, not only it implies, it makes it clear this mortgage will be valid forever until cancellation. It could be 20 years, 15 years, 50 years, or even 75 years. That mortgage will remain intact, and this mortgage will become invalid only after we cancel the mortgage. Even after advance is settled, the mortgage will still remain valid. So, when you say the mortgage is valid, when we are saying the mortgage is valid, then the mortgage, the asset which secures that particular mortgage, the asset over which we have created a mortgage also should be valid. No, see, I am telling you this mortgage, even 75 years, this mortgage is valid. 75 years, that mortgage will get cancelled only, will become invalid only after cancellation. So that means that mortgage can remain in force even 50 years, it is valid. So when I say for 50 years also, if it is valid until cancellation, just ask yourself, the asset.
Deposit mortgage.
Not deposit mortgage, the asset which is covered and
Mortgage of pledge goods, sir?
No, just see the asset on which, against which this mortgage has been executed also should be intact for 50 years. So you ask yourself, what is the asset which will not remain for 50 years?
Vehicles?
Vehicle, very good.
Assets which could depreciate, vehicles,
That's
machinery.
right. Yes, that's right. Vehicles, very good, very good.
So can we execute a floating mortgage over pledged goods?
Floating floating mortgage. No, we don't execute a floating mortgage over. When we are for pledge, we don't take a mortgage. For pledge, what we are taking is we are taking a pledge loan documentation, not a mortgage. For pledge loan, we are not taking a mortgage. When we are taking a pledge loan, we are taking a pledge documents. So that is different from a mortgage. That means pledge means that the documents, the particular assets are under pledge to the institution. So it's not a mortgage. Pledge is different. But here, vehicle, now see, is it clear to you, by the way? Is it clear?
Yes, sir. Generally, floating bonds can be used for some other facilities, but pledges, is it for the same facility, or can we continue the pledge?
Yes, you can continue, provided how you have executed that pledge document. Now, if that pledge documentation, if you have taken, if you are giving a customer a pledge facility of say 5 million, under that particular facility, it's a revolving limit. You can grant him a variety of facilities because it is you have given him you have created a pledge loan limit. You have created a pledge loan limit for which you have taken the relative documentation, not the mortgage. You are taking the documentation. So under that particular limit, and you are taking the documentation covering that particular limit, you can grant him a variety of facilities. But in a pledge loan, the main thing is, even in a mortgage, inspection is very important. But in a pledge loan, periodical follow-up constant inspection is a must. So you can create a pledge loan limit, 5 million pledge loan limit, for which you will take the relative documentation, and the customer is supposed to have the documents covering that pledge loan limit. Is it clear?
Now it's clear, sir.
Yes. So now, as I told you, motor vehicles, remember motor vehicle, you can't take a floating mortgage. Because now if I come to your bank and say, I want to buy a car, I want 5 million to buy a car. I am buying a car for 7 million, for which I have 2 million. I need a loan of 5 million. You will take a mortgage over my motor vehicle, but that mortgage is remember that mortgage is a fixed mortgage. Why? Because motor vehicles, there is a depreciation value. Because when you say a mortgage is valid forever, that means the car also should remain intact forever. That will never happen. So therefore, we take a mortgage. That particular mortgage is a fixed mortgage. Now, let me ask you another question. If intra traders, I know all of you would have heard about intra traders. They are one of the leading motor vehicle importers, merchants. Let us assume that if intra traders comes to your bank, right? If intra traders come to your bank for a facility of 100 million, intra traders, they are not taking a loan from. I'm just telling because they are one of the leading motor vehicle importers. I'm just giving it as an example. Let us assume intra traders comes to your bank and say that we want a loan of 100 million. We want a loan of 100 million because we want to have a buffer stock of motor vehicles. We want to take a loan of 100 million, for which we are giving you motor vehicles worth 300 million as security. They want a loan of 100 million, for which they are giving motor vehicles worth 300 million as security. So in other words, they are authorizing the bank to create a mortgage over their motor vehicles for 300 million. Now here, what is the mortgage you will take? Is it a floating or a fixed mortgage? Can you all tell me? Think carefully and answer. What do you think, according to you?
So are we creating the mortgage over
the motor vehicles?
Also,
yeah, we are creating mortgage over 300 million worth of motor vehicles which intra traders are having in their stores and shows. Showroom, sorry, stores and showrooms.
Against is fixed.
Sorry,
So we can go for a pledge facility, no?
not a pledge loan. What I'm saying is we are granting them a loan of, we are giving them a revolving facility of 100 million against a mortgage over their motorway consignment of, against a mortgage over consignment of motor vehicles of Toyota, Honda, Nissan, like the various types of motor vehicles they are having. The total value of the motor vehicle they are telling is 300 million. So they are asking you to create you can take a mortgage over motor vehicles. They are given a stock, they are given a list of motor vehicles, which comes to about 300 million. So they are asking you to take a mortgage over their motor vehicle. Now I am asking you, what is the mortgage you will take? Is it a floating or think
Stock mortgage.
carefully whether it is a fixed mortgage or a floating mortgage. Sorry, fixed mortgage.
So we can create a floating mortgage, sir, keeping the vehicle documents in our custody. When the customer comes to purchase a vehicle, we can release that documents, releasing the mortgage, and it could be continue as a floating.
Yes. Now actually here what happens is now here all their vehicles are brand new vehicle or unregistered vehicles.
Better to take a stock mortgage, no sir?
Sorry? Yes, tell me, don't worry.
Stock mortgage as a floating bond?
Floating bond, very good. It should be a floating mortgage. That's why I'm telling you. Because we can't take the motor vehicle books registration into our custody because all these vehicles are unregistered vehicles. Reconditioned, unregistered vehicles. Indra traders, they are not selling, I don't think they are selling second-hand vehicles. All are unregistered vehicles. So here, what happens is, the concept in our originally, earlier I told you all, for motor vehicle, we are taking a fixed mortgage. But here there's a difference. What is the difference? The difference is, here you have a consignment of motor vehicles against which you are creating a mortgage for 300 million. In other words, Indra traders have given you assurance. One of the conditions, they will at any time, they will always have 300 million worth of motor vehicles, Toyota, Nissan, Honda, whatever the brand, all these latest brands, motor vehicles we have 300 million worth of motor vehicles. So today, if Indra traders has come to your bank for a loan of 300 million, you have carried out an inspection and seen, you have counted the vehicles, everything, yes, 300 million worth of vehicles they have. Next Monday, next week, you go to Indra traders, they will not have the same vehicles which were shown to you last week. They will have different vehicles. So one of the conditions is, they will always have vehicles to the value of 300 million. They will always have vehicle to the value of 200, 300 million, not the same vehicle. So the difference here is, you are not creating a mortgage over a particular vehicle. Remember, listen to the words what I am using. Here you are creating a mortgage over a consignment of vehicle, not a particular vehicle. Not a particular vehicle. If I come to your bank for a loan and you create a mortgage over my motor vehicle, you are creating a mortgage over my particular motor vehicle, my vehicle, owned by me. But here, you are creating a mortgage over a consignment of motor vehicle. You are not asking for the serial number. You are not asking for the chassis number. You are not asking for the engine number. You are simply in the mortgage bond, you are telling stocks in trade of motor vehicles, brand new and unregistered motor vehicles of Toyota, Nissan, Sunny, Honda, like that, all the brand names they are giving. These are the branded motor vehicle, well-known motor vehicles. They are saying these are the vehicles we are having. So you are not tying the mortgage to a particular motor vehicle. So you are only having a consignment of motor vehicle. So anytime you go on inspection to Indra Trader, they will have 300 million worth of motor vehicle. You are not going to check the serial number. You are not going to check the engine number. You will only check the value of the motor vehicles. Is it clear? Is it clear? Is it clear? Any questions on it?
Yes, sir. Clear.
Now, if Indra traders managing director, let us assume if Indra Traders managing director comes to your bank and says, I want to buy a vehicle for 50 million, brand new vehicle, BMW or whatever it is, 50 million, for which I have 25 million, my contribution, I want a loan of 25 million from the bank. For this vehicle, for this loan, 50 million, you want 25 million loan, and he's telling you to create a mortgage over his motor vehicle, BMW. What is a mortgage? Fixed or floating?
Fixed mortgage.
Fixed mortgage, sir.
Fixed mortgage, very good. So remember these two scenarios. Number one is consignment of motor vehicle. You are creating a mortgage over motor vehicle, that is a floating mortgage. But here, the managing director comes for a motor loan to mortgage over, giving a mortgage over that particular motor vehicle. You are creating a fixed mortgage. Why? Because you are creating a mortgage over a designated motor vehicle, one vehicle. But consignment, always when you come across consignment of motor vehicles, it is a floating mortgage. Why? Because you are, as far as you are concerned, you are not worried about motor vehicle. You are creating a mortgage over stocks in trade. You are creating a mortgage over stocks in trade of motor vehicle. As far as you are concerned, you are creating a mortgage over a consignment of stocks, in this case, which are motor vehicles. Is it clear? Is it clear to you all now? Right. So now, because this is a very important area, why I am telling you this, I have seen in some of the banks, some of the people have, they have made mistakes, blunders. As a result of that, when the bank wanted to go for legal action, it was noted, it was observed, these people have granted fresh loans against fixed mortgages. Why? How did this happen? Because, when they wanted to grant a fresh loan to the customer, they just check their records, check from their system, there's a mortgage, then they grant the loan. So they are not gone deep into the matter, because most of the people were under the impression when you say mortgage is a mortgage. No, it is not a mortgage. There are two different situations, and we take mortgages, fixed mortgage and a floating mortgage. So remember, if there is a question, then for what purpose fixed mortgage? Fixed mortgage for motor vehicles. Motor vehicle, if the stocks are motor vehicle, it's always a floating mortgage. Right. Now, floating mortgage and fixed mortgage, I have explained to you all floating and fixed mortgage, because this will play a very major role in your executing a responsibilities, because you may go to a branch, you may be transferred to another branch, people will come and say, that we are granting a fresh loan, what is security? We have a mortgage. So always check the mortgage and see whether this particular mortgage is a floating or a fixed mortgage. Let me ask you another question. How do you check whether this mortgage is a fixed mortgage or a floating mortgage? Now you are going to a branch as branch manager. You want to see, they are coming and giving, you say, I have to find out whether this particular mortgage is a fixed mortgage or a floating mortgage. So you will ask for the file. So when you go through the file, how will you ascertain whether this particular mortgage is a floating mortgage or a fixed mortgage? You as a branch manager, you as a credit officer, how do you ascertain? They are coming given to you, say you want to release a loan. You say, before I release a loan, I want to see the mortgage bond. So then they come and give you the file. Then you take the file, and now you have the file. How do you ascertain whether this particular mortgage is a floating mortgage or a fixed mortgage? How do you ascertain? There is a simple mechanism. When you take the mortgage bond, read the mortgage bond very carefully, because it is a very boring story. It runs into several pages. Somewhere in the mortgage bond, you may come across a word which will say, the mortgage hereby created is of a continuing nature. Now, different lawyers may use different terminology, different words in the English language, but the lawyer may have said the mortgage hereby created is of a continuing nature. If that word continuing is there, you could be convinced it's a floating mortgage. When you go through the mortgage very carefully, you read the mortgage very carefully, if you find the word continuing nature, then that means, that confirms it's a floating mortgage. But if I were you, if I am the branch manager, I will go one extra step. like that gentleman told, while crossing the road at Gaul Road, look at all signals. I will go an extra step. What is the extra step you will go? You will check the mortgage bond. Carefully, you will check the mortgage bond. Somewhere you will find continuing nature in there. What
Rate may be mentioned in the bond.
Sorry?
If it is fixed, then interest rate may be mentioned there.
Interest rates there, but apart from the interest rate, can we rely on the interest rate only alone? We want a confirmation. Now you have gone through the mortgage. Mortgage says it is a floating, not a floating. The mortgage hereby created is of a continuing nature. So you are to some extent.
We can check.
Sorry.
Sir, we can check with the legal officer.
Very
we
good.
Can
yes.
Recheck with the legal.
Excellent. Excellent. That's what you should do. So you will take that additional, you will go an extra mile, you will take additional precaution by speaking to the legal department, because unlike during our time, now everything at the click of a button, you can talk to the lawyer, click of the button, you can get a reply. You can speak to the lawyer and tell the lawyer, you know, I have this mortgage bond number 83 or whatever it is, customer's name, you give the customer, please confirm to me within the next 10 or 15 minutes whether it is a floating mortgage. And the lawyer will send you an email saying that this I hereby confirm the mortgage hereby created is of a floating mortgage. Then you take that particular lawyer's confirmation, attach it to the mortgage bond and keep it, and you are safe. Because most of the lawyers, after the mortgage bond is executed, when they confirm to the bank, I hereby confirm the execution of the mortgage, sometimes some lawyers will use the word I hereby confirm a floating mortgage was executed. But sometimes some lawyers very silent. So as like the gentleman said, you know, the participant said, I will go an extra mile. I will check the mortgage bond very carefully. And I will say, I am convinced, yeah, it's a floating mortgage. But I will speak to the lawyer, get the lawyer's confirmation and attach it to the file. Why? Because in case of a litigation, in case some problem crops up, in case of a default, this particular document is going to play a major role towards the realization of our exposure. Right. Now we are coming to the next stage on the mortgager. When you say mortgager, there are so many types of mortgages. Now, fixed mortgages and floating mortgage, I explained to you all. What do we call a primary mortgage? I'm sure most of you all will know. Now, if I come to your bank for a loan, say 2 million or whatever the loan, mortgaging my house, you are creating a mortgage for the very first time you are executing a mortgage. Then that mortgage is defined as primary mortgage, like going to primary school. Why? Because that is a very first mortgage you are creating over my property. That is a very first mortgage you are creating over my property. So therefore, you are defining that particular mortgage as primary mortgage. I have taken a loan of 2 million by mortgaging my house. After some time, there was a necessity as arising for me to take a further loan against the same property. So I go back to the bank, come to you and say, so I want an additional loan of another 1 million. Then against the same property, which has substantial value. So you take a mortgage, you are taking the mortgage for the second time you are taking. Already you are taking the mortgage, first time, primary, second. Second time you are taking the mortgage, secondary mortgage. Then after some time, I tell that I want to take a further loan. I want to color wash my house, for which I need the 2-3 lakhs, you know, and I took the other loans only recently. I took, still I have not started the repayment. So can you give me additional further loan of 2 or 3 lakhs or whatever? So then you create a mortgage. Then that mortgage, third time you are creating the mortgage, tertiary mortgage. So like that you can go on. You can even take 25, 30 or 50 or 100 mortgages. You can take it, provided that particular asset has a value to secure that particular mortgage. So that is what it's called: primary mortgage, secondary mortgage, tertiary mortgage, fourth mortgage, fifth mortgage, sixth mortgage, like that. You can create any amount of mortgages over a particular asset, provided that particular asset has the value to secure that mortgage. Now, primary mortgage, secondary mortgage, tertiary mortgage. Now, what do you mean by primary mortgage? As I told you, primary mortgage is the very first mortgage executed to secure a facility. Secondary and tertiary mortgages, when you say secondary, tertiary, it will go on like that. I just as an example giving you secondary and tertiary. Secondary, tertiary, fourth mortgage, fifth mortgage, sixth mortgage, seventh mortgage, eighth mortgage, like that you can go on. Every time the customer wants additional funds, he will come to the bank. So there's no leeway, you will want to execute further mortgages provided that particular asset as well. You can't just go on and execute mortgage if that particular asset does not have the value to secure your loan. No point in taking mortgages after mortgages if my house doesn't have the value to secure all those, to hold those mortgages. So secondary tertiary mortgages rank in order subject to existing mortgage. We could execute any number of mortgages over an asset subject to the value of asset to our overall value. Now, this is very important for you all to consider. Important factors to be considered prior to the execution of any additional mortgage. Before you execute a mortgage, now see, I have taken a loan of 2 million by executing a primary mortgage for the very first time. I have come to your bank for a loan. You have executed a mortgage, which is a primary mortgage. The first mortgage you have executed, covering the same property, should have adequate value to secure such an. Any additional mortgage executed to secure an advance subsequent to the primary mortgage covering the same property asset should have adequate value to secure such an advance. If I come to you again, second time and ask for a loan, and I tell you to execute an additional mortgage, before you execute a mortgage, additional mortgage, you have to find out what is the value of my house. Whether, now you have already granted me a loan of 2 million, and now I am coming and asking you to give me another loan of 1 million, whether that 1 million could be secured, whether this particular mortgage, this particular asset will hold those mortgages. We should ensure adequate precautions taken to secure such an exposure by ascertaining the value of asset which secures the overall mortgage. We have to ensure you can go and execute the mortgages. In that case, you will only have a piece of paper. Before you execute any additional mortgages, you have to ascertain the value of the asset. If I will come and tell you, you go and execute additional mortgage. You can execute additional mortgage. But before executing the additional mortgage, you have to find out whether this particular asset, property, has the value to hold these additional mortgages which you are creating. Executing a mortgage for the sake of security will be a futile exercise and we will have no value. So remember, every time you are offered, you have to execute additional mortgage. The main criteria which you have to ascertain is what is the value of that particular asset on which you have already created a mortgage. Whether if I create any additional mortgage, just whether that particular property will hold these mortgages. Is it clear? Is it clear to you all? Any question? Any questions on this? You are there, no?
It's clear, sir.
Right. So now the next one, concurrent mortgage. What do you mean by concurrent mortgage? A concurrent mortgage is a mortgage executed over an asset to secure facilities to two or more entities. Now, when you say concurrent mortgage, now let us assume a customer comes to your bank. I am assuming, I am not giving any names. Let us assume a customer comes to your bank and says, we have a massive property, bare land in Homagama. Somewhere in Homagama, we have a massive land. Now they are saying that we want to, start a tile factory, not roofing tiles, wall tiles and floor tiles. They say we want to start a tile factory, wall tiles and floor tile, for which there is a big demand. They are telling that there's a big demand because there are only 1 or 2 companies which are having a monopoly. So we feel that if we set up a tile factory, we can, we'll have a very good business. For which The customer says, we have done a project proposal. They have got some experts to do a project proposal. So these people have hired some experts to do a project proposal. The experts have prepared a project report, feasibility report towards the establishment of a tile factory where they have done the survey, marketing, everything, and they say, very good demand there because the local manufacturers are unable to meet the demand. So therefore, they are selling tiles at this price. So if we also start, we can this thing, and they have done. So they have done a project proposal, and they are coming to your bank for a loan of 1 billion, not million, billion, B. So they have come to your bank for a loan of 1 billion. So your bank, and they say, now we want a loan of 1 billion. Now we have a massive land area in Pomagama that is also very valuable land, comes to some millions. So we need, there's a shortfall of 1 billion for us to import the machinery from Germany. We are importing the machinery, latest machinery towards the manufacture of tiles from Italy. From Italy, we are importing machinery. And from world-class people, we are importing the machinery. So they have come to you. So your bank also, people have management, they have gone through the proposal. So they have studied the proposal in detail, and they have come to the conclusion, this is a very good proposal. So they have, in principle, they have agreed to grant this loan because they find that it's a very good proposal. Let us assume that this particular bank, HNB, they have come to HNB management, they have gone through and they find it's a very good proposal. What is security? They are saying you can take a mortgage over our land at Homagama and the building, because we are going to put up a massive building and also the machinery. Overall, it will come to about 1.5 billion, they say. We are only asking 1 billion from you. So you can create a mortgage over the entire property with the machinery, everything. So the HM management, they may have gone through it, but they have come to the conclusion it's a very good project. But they don't want to take the entire burden. They don't want to take the 1 billion they are prepared to give, but they feel prudent bankers, prudent decision makers will always want to share that liability with another institution. So then they approach another bank. Let us assume they have approached NDB, and they have HNB. They have approached NDB, and they have, as an example, I am showing. I'm telling you all. They have told NDB we have a very good proposal. So do you like to share? So then NDB management also could have called for the document. They also have gone through it, and they are also happy. They said yes, we are happy. So then, on principle, HNB has agreed to grant 500 million. NDB has agreed to grant 500 million. So the customer wanted 1 billion. This 1 billion is shared by both these banks are sharing because they have done their what you call credit appraisal. Both banks have done, and they have come to the conclusion it's a very good proposal. So then, what is security? Mortgage. Customer is giving a mortgage over the immobile property at Homagama with the land and building and machinery. So then both banks have to execute a mortgage. So that mortgage is concurrent mortgage. That means concurrent mortgage is a mortgage created, executed over an asset to secure facilities to two or more entities. So HNB also has granted a loan of 500 million. NDB also has granted a loan of 500 million. But in security, both have jointly with their concurrent of each party execute a mortgage for 1 billion, not million, 1 billion. So each bank has equal rights over the mortgage. Both have equal rights. But since it was a HNB customer, HNB may be having the original documents. NDB may be having a certified copy of the document, deeds and all. Why HNB is a lead bank. But as far as the mortgage is concerned, both have equal rights. So I gave you as an example to explain the concept of concurrent mortgage, but you may come across several similar instances like this. You create a mortgage over a particular asset to grant a loan to two people. Is it clear? Is it clear? Any questions on that?
So if there is a default on this,
Yes, very good question. I expected. Yes. If there's a default, what will happen? If there's a default, now, if there's a default, let us assume that if the customer, he has defaulted the loan which he has been paying to HNB, but he has been paying the installment of the due date to NDB. So then can HNB go for legal action? No, they can't go. They have to go for legal action only with the concurrence of the other institution. So both have to jointly decide. Am I correct? Means both have to jointly decide the action because both have equal right. We can't say that, he is paying to NDB on the due date by HNB, so we are going to go for legal action. No. Then what will happen is we will seek the assistance of NDB and persuade the customer to come to some sort of. Both banks have to go together. Is it clear, Miss?
Okay, thank you, sir.
Right. Then third-party mortgages. Now this is very important. Everything is important, but here correct. And you all have asked very good questions. So don't worry. Let us assume I come to your bank. You are the manager. You are the manager. I walk into your bank and say, I want a loan of 5 million. I want a loan of 5 million. Will you give me the loan or not? If I come to your bank and ask for a loan of 5 million for a personal this thing, I say I want a loan of 5 million. Will you consider my request favorably? What is the concern you will have?
If your repayment capacity is proved, sir, then we can, based on the cash flows, we can execute mortgage as a comfort.
Yes, with if I prove my repayment capacity, you say you will grant the very good. So I have proved my repayment capacity. Is that enough? I have proved my repayment capacity. Yes, miss.
Age.
That's right. First, the first answer what you gave is also very good. Repayment capacity. Then now she said age. The age is now we always say our age is our biggest enemy. We have been telling our age is our biggest enemy. Although we don't use the die, our age is the biggest enemy. Because nobody will want to give us a loan, because why? We have passed that age. When you say that particular age, when you pass a particular age, the bankers are reluctant to grant them a loan. So as both of you all give the correct answer here, he said, the previous participant said that if the repayment is proved to his satisfaction, he will grant the loan. Very good. That's the correct answer. Then the second answer given by this lady also, very good answer. Age. Age plays a major role. Even if I am able to prove my repayment capacity, your concern will be the age. Why? Because after a certain particular age, you are reluctant to consider granting a loan, because you will be worried if something happens, you will not be in a position to recover the loan. So then comes the security aspect of it. You will ask me, so you may not tell me about age, because you will not tell me, sir, we can't grant you because you will die. You can't. So you will ask, what is sir, do you have any security? What is security? Then I will tell you, I don't have any asset. You don't have a house. I don't have a house. I don't have any vehicle. I don't have any asset to offer you as security. So then we can't grant you a loan, because we need some asset, because we can't grant you a clean facility without any security. Then I may tell you, my sister is having some assets, properties, because my sister is a rich lady. I don't have a sister, unfortunately. Let us assume that I have a sister. I will tell you that my sister has a lot of properties. So if I ask my sister to give one of her properties, she will agree, but will you take my sister's property as security and grant me the loan? Will you take my sister's property and grant me the loan? I'm asking you all.
We can take it as
Joint loans.
Yeah,
security,
you can join your sister.
provided that the account is joined with the
Yeah,
property holder.
that's right. Very good, very good. So yeah, yes, you will take my sister's property and grant me a loan. So if you take my sister's property and grant me a loan, if you take my sister's property, you are granting me a loan. Let us assume that you are granting me the loan, taking my sister's property. So if you take my sister's property, mortgage over my sister's property, that is a third-party mortgage. That is defined as a third-party mortgage. But we are now not taking third-party mortgages due to certain compulsion. I will explain to you in the next slide. So third-party mortgages, banks are now not taking third-party mortgage, because if you take my sister's property, it's a third-party mortgage. Because for my loan, you are taking somebody else's property. That is what is called third-party. So you are not taking third-party mortgage, because you have been told not to take third-party. You will take a direct mortgage. So how do you overcome that? Like what you all told just now, you will make my sister a co-borrower. You will make my sister a co-borrower, a joint borrower. So the concept of third party is eliminated. There's no third party. She becomes a direct and a co-borrower. So why party? Many years ago, there was a case in which one of the banks, they have granted a loan to a particular customer by bank A. And, as security, they are taken the property of a third party, of a person who has purchased a property, an apartment built by the customer. In other words, this customer has taken a loan from this bank to build a apartment complex. And as security, the bank has taken a mortgage over those apartments which were being constructed. So that means the people who were purchasing the apartment, they have given a mortgage over the apartments which were being purchased by them from this customer who was a borrower. So what happened? The customer took the loan and he defaulted. When the customer defaulted, the bank wanted to go for parate action. I will explain what is parate action in my next slide. Don't worry about it. For the moment, just focus on the parate action. Just think what is parate action. I'll tell you what is parate action. So the bank wanted to go for parate action. Action means they want to auction the property. They want to sell the property. Then the customer went to courts against the bank's action for injunction. That means he sought the court's permission to stop the bank in auctioning the property. Then the Supreme Court gave a ruling and said, for third-party mortgages, you can't go for parate action. That means under parate action, you can auction the property. If it's the third party, you can't auction the property. So the Supreme Court said, just because this customer has defaulted, you can't go and auction somebody else's property to recover your loan. Now here, this person has given his property to help this person, and just because this man has defaulted, you can't go and sell this third party, that person's property, to recover your loan. So what happened? Then the bank lost the case. Then thereafter, bankers have done their homework. Thereafter, bankers were very careful. Whenever they come across any case or instance where a third party property is offered as security, what do? They connect the third party as a direct party to the borrower by making them a co-borrower or a joint borrower. So, after this case, bankers have done their homework and they have been, whenever they come across a situation where a third party property is given, they make that person a co-borrower, a joint borrower. Then Again, there was a case where a third party was made a joint borrower, and there was a default. When the bank wanted to go for a parate action, the customer sought the intervention of the courts for injunction. The courts refused to grant an injunction. What did they say? The court said, if the third party has a direct connection or they have some connectivity to the business or to the borrowing, it cannot be considered as third party. You can go for parate action. That means if the person who is operating the third party is directly connected to the borrowing, that means he is a co-borrower or a joint borrower, or in other words, if he has any connectivity to the borrowing or to his business, if he's a partner of the business or if he's the director of the business, then you can go for parate action. So remember, now third-party mortgages, bankers are now not going for third-party mortgages. You may come across situation, if you come across situation where a customer is unable to offer unable to offer a property as security, and if he offers somebody else's property as security to you, you can always make that person, it's prudent for you to make that person a co-borrower, a joint borrower. Is it clear? Any questions on this? Is it clear to you?
So then are we supposed to check the repayment capacity of the co-borrower also? In that case?
Yes, no, that is not necessary. That's not necessary. Because that is not repayment capacity of the co-borrower is not necessary. We will check the repayment capacity of the principal borrower. Only the principal borrower's repayment capacity we are checking. Third party's borrowing capacity not necessary, because the repayment of the loan is purely on the strength of the principal borrower. So it's not necessary.
Yeah, and also and also the co-borrower. Now, if we can't do like this, we are giving the loan only for the we are giving the loan as an individual loan, and can we
joint borrower.
No, I'm asking can we have a mortgage bond with 2 or more parties and the loan as an individual loan? No, right?
No. You have to loan has to be given jointly. Means account has to be open. Account has to be open jointly.
Right.
You have to open the account jointly. It's a co-borrower means you make the loan also joint. Then you can open the account also joint.
Then only we can join the mortgage one.
Join the mortgage, because otherwise problem is later if you have to go for legal action.
Yeah.
You have to submit the account statements, everything.
Yeah.
So then there will some legal problem may crop up to say that loan was granted to so and so, that this third party was not at all involved. So everything you have to make jointly.
Thank you, sir.
So now,
sir, small question.
Yes.
Sir, if the loan is granted on a company name and taking a property of a director, on whose name the mortgage bond is going to be executed?
Mortgage bond will be the borrower will be the company. The mortgagee will be the owner of the property.
All right.
Yeah, on that subject, the next slide is on that particular subject. I'm going to show you. Now see this one. Look at this particular one. I don't know whether you can hold. This appeared in the papers many years ago. I'll read it for you. Can you read it?
Yes, sir.
Yes, I will read it for you. Mortgage, same question what you asked. Something related in relation to the question what you asked. Mortgage third-party assets can be sold, order Supreme Court. Now this happened many years ago. The Yashodhara Holdings Private Limited had filed a writ application in the Court of Appeal against People's Bank to challenge a resolution adopted by the bank under the provision of the People's Bank Act to sell the assets mortgaged to the bank by Yashasri Kasturiarachi, Managing Director of Yashodhara Holding Private Limited, to secure an overdraft facility granted to the said company. The judgment was delivered in favor of People's Bank, and Yashodhara Holdings Limited appealed to the Supreme Court. In an appeal to the Supreme Court, a 3-judge bench comprising the Chief Justice Sarath N. Silva, Justice Shirani Tilakavagna, and Justice P.A. Ratnayaka dismissed the appeal, directing the sale of assets mortgaged. In this action, the bank possibly the bank's possibility to execute the priority rights for third-party mortgages has been challenged. And having considered the submissions made on behalf of both parties, the Supreme Court decided that a controlling party, shareholders and directors of a company cannot be considered as third parties and refused to grant leave to proceed the above application. Further, the Supreme Court directed the counsel who appeared on behalf of the bank to advise the chairman of People's Bank to carry out an investigation on transactions and officials who granted loans of this nature and to take suitable measures to prevent. Now, in this case, the Supreme Court has gone one step further and directed the chairman of the chairman of the People's Bank to investigate and to take action against the officers who was instrumental in granting loans of this magnitude to this particular customer. So this is, the Supreme Court has very clearly said, the director of a company cannot be considered as third party because he is also part of the company. Now, last week, there was another judgment given by the Supreme Court. This last week, 8th of June, same case. Yashoda Holdings loses legal barrier. Now, the earlier cutting what I showed you, I think that happened about 20 years back. So again, they have appealed to the Supreme Court. Now, this is last week. The Supreme Court recently allowed People's Bank to proceed with the disposing of the mortgage property belonging to her benefited director of Yashodhara Holdings Limited, which was mortgaged to the bank as security for the facility granted to Yashodhara Holdings Limited by the bank. The particular case had been filed by Yashodhara Holdings, challenging the acquisition of the mortgage property in terms of People's Bank Act something. Having considered legal arguments from both the parties, the Supreme Court decided to permit the bank to proceed with the disposal of the mortgage property. This judgment, by lifting the corporate veil, further cannot hide, further confirm that a director cannot hide under the disguise of the company's name and the property of a benefited director of a company which is mortgaged to a bank is also subject to a priority execution. While this judgment enables People's Bank to recover part of the debt which had been defaulted by Yashodhara Holdings Limited for over 2 decades, banking experts are of the view that it is also a remarkable judgment for all commercial banks as it will act as a deterrent against willful defaulters who seek to hide from their debt liabilities towards bank. Now here, even though Supreme Court gave permission for the bank to auction, the Yashodhara Holding again went to Supreme Court. They sought judgment to asking them to lift the corporate veil. Now, what is this corporate veil? When you say corporate veil, the corporate veil is a legal concept which separates the actions of an organization to the actions of the shareholder. Moreover, it protects the shareholders from being liable for the company's action. So here, these people have gone to the courts and wanted courts' permission to lift the corporate veil, which was declined by refused by the Supreme Court. So here, this is a third party. This is just third party. Now, these are the implications, complications which will arise if you are taking a third party mortgage. So in other words, the ruling what is given is if the third party has a direct connection or some connectivity with the borrowing or to the business, in this case, the director has mortgaged the property. So if he is a director, he is connected to the business. So therefore, it cannot be considered as third-party mortgages. Is it clear to you all? Is it clear?
Yes, sir.
Yes, sir.
Yes, sir. Thank you.
Right. So now, this is now we are coming now factors to be considered towards assessing the acceptability of security. Now, see this particular slide. Make a note of this particular slide. This is as a guideline for you, not only for the exam, even as for your guideline. Whenever you are taking any security to secure an advance, these are the 4 important ingredients which you have to ensure that you comply, you adhere to. Number 1, the ownership and title. That helmet case, where that person was not interested. But here we can't do it. Whatever security is given, whether it's a immovable property or whatever is given to us, we have to first of all ascertain its ownership and title. Whether he is a legal owner, legally, whether he has a legal ownership. You don't have to worry. I will explain to you all what are the steps. How do you ascertain what is the mechanism available to you at your disposal? Everything will be explained to you. So don't worry. Whatever security we are taking, number one is we have to ensure that ownership and title. How do we assess? How do we check? How do we ascertain the ownership of a particular property which is given as security? Then comes number two, its realizable value in case of an eventuality. In case of an eventuality which could arise due to default or any unforeseen circumstances, what is the amount we could realize? Can we realize our full exposure? How do you realize? What is the mechanism available to you to determine, to ensure that you comply with these stipulations? It's very important. You don't have to worry. I will explain to you all. Everything will be explained from A to Z. Everything will be explained to you. So only you have to only listen to my lectures very carefully. Everything will be explained. So it's realizable value in case of any eventuality. In case something happens, what is the amount we will get? Then number three, longevity and durability. During the currency of this facility, now I am granting a loan to be repaid within a period of 20 years. Up to this 20 years, whether this security will remain intact, whether it will remain as per the original status. At the time of granting the loan, this was 20 million. So whether that 20 million will be intact during the entire period of the loan. It can't come down. It can go up, but it can't come down. Whether this will remain intact. Then number three, marketability of the property. The most crucial, you may have a property valued at 20 million, 50 million, 100 million. But if you can't sell it, what's the point in having it? Who is going to buy it? Are there buyers? That is where the marketability of the asset plays a major role. Marketability, whether we are in a position to market the asset, whether there are ready buyers. So if you adhere to these four principles which are listed in this particular slide, you don't have to worry. The security what you take, you will be a dependable security to face any eventuality. Any questions on this particular slide? Any questions? Any questions? Can I move it to the next one?
Yes, sir.
Right. So now, attributes of good security. You ask any banker, senior banker, or any banker, what is the best security? The obvious answer is immovable property. The best securities in cash is also there, but if I have cash, I need not go from pillar to post begging for a loan. So when you ask people what is the best security, they say cash. Cash is the best security, but if I have a cash, the customer need not waste his time going from pillar to post begging for a loan. So the best security, as far as the bankers are concerned, in the point of view of a banker, is immovable property. Easily disposable assets are considered as strong security assets, which can be disposed, which can be sold without any difficulty, which comes to our mind is immovable. For all the assets, even to sell a motor vehicle, it's not easy, difficult to sell a motor vehicle. So immovable property, even though it's difficult, but you are assured of getting your advance, your exposure. Anytime you want your demand, you are in a position to realize your exposure because you have a solid security. Now, why do we definition of immovable property under the Mortgage Act number 6 of 49 stipulates land includes things attached to the earth or permanently fastened to anything to the earth and estate or interest in or over land. That means under the Mortgage Act, in the land, when you say land, any things permanently attached to the earth are categorized as immovable property. Now, category of immovable property. When you say immovable property, naturally, obviously, the main thing which comes to your mind will be house and property. When you ask what are the immovable properties, what are the categories, list or name the immovable property, the obvious answer will be house and property. In addition to the house and property, land and building are also immovable property. Condominium, apartments, immovable machinery. There are certain machinery, I will explain to you later. Heavy machinery, these machineries are also considered as immovable property. Why? Because they cannot be removed easily. Always considered as first class and solid security. House and property, land and building, condominium, immovable machinery, always considered as first class and solid security. Then look at this particular slide. There are various securities which I have listed, immovable property. Now, out of all these securities, immovable property stands taller. Why? Because there are certain reasons. I will show you what are the reasons. Movable asset, life policy, machinery, personal guarantee, life insurance, cash. Out of all these, immovable properties source stands taller, strong. Why is that? These are the reasons. Number one, the value is not only stable, it's on an increasing trend. When you take an immovable property as security, the value always appreciates. Very rarely the value comes down. Very rarely. It's a very rare occurrence. It's a very rare occurrence. Always immovable property, the value is on an increasing trend. Number two, bank has a solid legal right over the property. You have a solid legal right. You have executed a mortgage, you have the title examination, title has been examined, so you have a solid legal title. Solid asset, the value remains intact and does not depreciate. Solid asset, the value remains intact and does not depreciate. The asset is solid. The value remains intact, even 20 years or 25 years or 50 years even. Even 50 years, the value remains solid. There are certain precautions which we have to take, which will be explained to you all. The value remains intact. Parate execution ensures easy realization in case of an eventuality. I will explain what is parate in the next slide. Don't worry about parate. Parate execution means that you can auction the property. I will explain to you all. Next slide. Motivation on the part of the borrowers to honor their commitments in view of the valuable security held by the bank. There is a motivation on the part of the borrower to honor their commitment. Now, supposing if you have given your immovable property as security, you will somehow or other want to settle the facility. Because you know very well, because I have given a very strong security to the bank, and if I don't honor my commitment, they will auction the property, they will sell the property. You know very well. Why? You have given the title deeds, bank has taken a mortgage over the property, so bank will, anytime they want it, they will auction the property. So therefore, there is a motivation on the part of the borrowers to honor their commitments in view of the valuable security held by the bank. Then easy to monitor the asset and less management cost. Easy to monitor the asset. As a bank manager, you don't have to carry out inspections to see whether the property is there. That will be there. That will be there. Easy to monitor. So less management cost. Just imagine if you had to carry out inspection every month. See the cost to be incurred by you. Peace of mind to the banker. There is complete peace of mind to you. Why? You are not bothered. Now I could remember in one of the banks I was attached to, until the CEO gave me instructions, wanted me to go to a particular branch. And he said, just go to this particular branch because they have a lot of NPAs. And just speak to the manager and find out what is wrong with this man, why a lot of loans, all these loans have gone bad. So I visited this particular branch and I spoke to the manager, but he was not worried. He said, sir, I have granted loans. Some of the loans have gone bad. I know NPA portfolio is very high. But let me assure you, sir, all the loans which are reflecting in our NPA are secured against immovable property. And he said, for 5 million loan, I have taken 10 million worth of properties. So, which was correct. So when I checked, what the manager said was correct. He was not bothered. He said, sir, I have, due to certain reasons, facilities have gone bad, but I have taken adequate security for the bank. So which I told to the CEO also, because he has taken adequate security. Most of these facilities are covered against immovable property. So these are the benefits available to you when you are taking immovable property as security. But apart from this, look at this particular slide very carefully. Now I am going to pose another question to you. Apart from this, apart from all these benefits which are available to you, there is another benefit which is available to you if you take immovable property as security. Can you tell me what it is? You all are very talented people from the answers what you all gave and from the questions what you all gave. So I am posing a question to you. Apart from these benefits, there is another important benefit which is available to you if you take immovable property as security. What is that? According to you?
In case of default, so in case of default, we don't need to provide provisions for bad debts.
Yeah, very good. Yeah, that is also true. Because when you take immovable property, according to central bank regulation, when you are making provision, immovable property, the percentage of provision is at a minimum level. That's also very good. In addition to that, there's another important benefit available to you when you are taking immovable property as security. Just ask yourself, if you take an immovable property, what are the benefits available to you? What can the customer do to me? Yes. I have deliberately not put that particular benefit in my slide because I want you all to come out. Immobile property benefits, value stable, solid legal rights, solid asset, priority experience, motivation.
There's a chance of customer having the interest to settle it even at a later point.
Yeah, that is also, yes, what you said is correct. I have listed that here, Miss. Motivation on the part of the borrower to honor their commitments in view of valuable security held by the bank. Am I correct?
Yes.
The customer will become a lifetime customer of the bank because his properties are mortgaged.
That's right. Your answer is correct. You have come somewhere closer to that. Your answer is 90% correct. So another 10% you have missed. Your answer is excellent. You have come to the correct answer. 90%. There is another 10%. You have to complete it. How
future potential.
Huh?
Future potential.
Yeah, future potential also there because he has mortgage.
Using a single property, we can give different facilities. We can grant different facilities.
Yes, that's right. Yes, that's right. But you have come. You have given the answer. You all have given the answer. But there's another small 10% to complete the answer.
We can retain the customer.
Right. Excellent.
Going out of the bank.
Yes, very good. You can retain the customer. Very good. Because if he has given a mortgage over immobile property, the customer cannot go to another bank without your blessings. Am I correct?
Yes.
Yes. Retain the customer. We can retain the customer because he can't go to another bank. He can't go to another bank without your blessings. He can go. He may attempt to go, but he can go only with your blessing. Why? Because you have the mortgage, you have the title deeds, everything is with you. So he can't go. Even if another bank canvassed, let us assume that he has gone to another bank, canvassed. Other bank has canvassed. So that bank will they automatically give the loan? No, they will want a letter from your bank to say that you are prepared to release that mortgage. Am I correct? They will want a letter from the bank to confirm that they are prepared to release the mortgage. They are prepared to cancel the mortgage. Or the customer might come and tell you, sir, can you give a letter addressed to this bank saying these are my outstandings? Am I correct? So when the customer comes to you with these requests, you can ask the customer, you will know The customer is trying to go to another bank. You will ask the customer, sir, why do you want this letter? No, I am going to this bank. Why you are going to this bank? No, I am taking additional loan. Then you will tell the customer, no, I will give the loan. No, they are giving at this rate. I will also give at this rate. He can't go. He can't go without your blessings. At the same time, there are certain customers, they don't want to create over and over, they don't want to create mortgages. They don't want to create, they are very sensitive, certain customers. They say, no, we don't want to create, I have already mortgaged my properties to this bank, again to kind. Now, there are some banks, I know very well, some banks, they are even going to the extent of bearing the legal expenses and stamp duty to get the customer. Because some customers say, no, if we execute a mortgage here, then there's a stamp duty, there's a legal charges. So banks say, no, we will waive off. So as you said, correctly said, means you will be able to retain the customer. Customer cannot go without your blessing. I have not put that particular clause here, benefit here, because I wanted the participants to come out of it. You came out with the answer. Thank you very much. It is very clear. Is it clear to you all? Benefits in obtaining immobile property. If there is a question, what are the benefits available to the bank? If when you are taking immobile property, the answer is here. You don't have to write the whole thing.
So a small question.
Yeah, yes.
When it comes to this immovable machinery, how can we describe this increase in trending value or the value stability?
Yes, machinery. I will explain to you because in my the follow-up slide there is an item on machinery. I will explain to you machinery. When I explain the machinery, I will explain to you about that.
Okay.
Yes, because there is another slide which I have reserved for machinery. When I take up that particular slide, I will explain to you. I think the follow-up slides it is there, machinery. Your question is machinery. There won't be any increase.
Yes, when it comes to depreciates.
So if the simple answer is when you are taking a machinery mortgage, if it's a immobile machinery, there is no increase. So every time when we renew, we may have to call for a fresh valuation.
Okay, sir.
We have to go call for a fresh valuation.
Okay.
Machinery. If it's a immobile. Okay. Yes. Any questions on that? Right. So now to complete that one, Parate execution. Now I have explained to you all everything. Now coming to Parate. What is Parate? Definition of a Parate. Parate execution is a term defaulting customers of a bank fear most. Parate is a Dutch term which means immediate, and Parate execution basically means a debt recovery process outside the normal law. The moment Parate execution notice is published in the newspaper, the borrower loses the reputation and gets exposed as a defaulter. Enhanced limit. With the insertion of the new section 5A, the Recovery of Loans by Banks Special Provision Act of 1980 allow banks to resort to Parate action only if the principal sum borrowed is 5 million. The flow of 5 million imposed excludes any interest accrued or penalties imposed thereon. Accordingly, up to 5 million, all cases are mandated to follow the normal judiciary process. So I will explain what is Parate action. Parate execution or Parate action is if you have granted, remember, listen to this very carefully, if you have granted a loan to a particular customer against a mortgage over his immovable property, and if the original amount is 5 million, if the customer defaults, you have the option. I am using the word option. You have the option to auction the property to recover the loan. So in other words, if I have come to your bank for a loan of 5 million, you have granted me a loan of 5 million by mortgaging. You are taking a mortgage over my house and property. You have granted me a loan of 5 million. And if I default, you have the right to auction it. You don't have to go to courts. You can auction it. But that is the last option, not the first option. You must remember, young bankers like you all must remember, Parate action is not the first option. It's the last option. Now, let us assume a practical scenario. I have come to your bank for a loan of 5 million. You have granted me a loan of 5 million. I have mortgaged my house and property, the house where I am residing. I have been paying the installments on the due date. I have been paying for the last 4 years. I have been paying the installments on the due date. After the expiry of 4 years, I have got into some commitment, some business commitment or some personal commitment. As a result of that, I couldn't service my loan. So the loan has gone into arrears for about 5 months. The loan has been in arrears. Then you write letters to me, then I come and meet you. Then I ask you to give me some time. I'm asking you, sir, I couldn't repay the loan on the due date because I got into some financial commitments. As a result of that, my loan has gone into arrears. Can you give me some more time? So if you tell me, if you say, no, I can't give you time. Why? Because I can execute the parate action to auction the property. So, and then I plead with you. I say, sir, don't do that. If you do that, I will be on the road. My family will be on the road. I don't have any other house. I am having only this house. I am not a willful defaulter. I am not telling you that I will not pay. I am telling you that I will pay. Only thing I am asking for time. You say, no, I will go for parate action. We are going to auction it. If you take that stand, remember, if you take that stand, I can seek the intervention of the courts. I can go to courts, seek the intervention of the courts, and I can go and tell the courts, I have taken a loan from this bank. I have been paying the installment the due date. Now, for the last 6 months, I couldn't service a loan because I got into some financial commitments. Now, bank is trying to auction the property. I am asking the bank to give me some time. Then the courts may intervene and issue notice to the bank, injunction notice, and stop the auction. Courts will ask the bank, direct the bank not to auction the property. Injunction, that is what is called injunction. So that's why we always say parate action is the last option and not the first option. Now, if I ask you another question, I don't know whether how many of you all will be able to answer. When this parate action was extended to all these banks in 1990, what was the limit? Can you all tell me? What was the limit? When this act was enacted in 1990, what was the limit? What was the limit? Any guesses?
500,000?
No, not 500,000. You have come somewhere closer. It was 150,000. It was 150,000. When the act was enacted in 1990, the stipulated amount was 150,000. So that means if a customer who has taken a loan of 150,000 rupees by mortgaging his house, if he has defaulted, the banks could auction the property. How did this 150,000 come to 5 million? How did this come to 5 million? Because some banks have been abusing and misusing it. Some banks, when a customer defaults, they have been auctioning the property. They have threatening the customer. So representations were made to the then government in 2010 or to somewhere during that time. And representations were made to the government saying that the banks are, abusing or misusing the parate execution by auctioning property. So therefore, the government told the banks, we gave you all a powerful weapon, which you all have not used it properly. You all have been abusing, misusing. So therefore, we are going to enhance the limit to 5 million. Banks protested, but the government went ahead and they enhanced the limit to 5 million. Just imagine a limit which was 150,000 was enhanced to 5 million. So if today, if there is a facility which is below 5 million, you can't go for parate action. You can go only if the original amount was 5 million. Again, it's immovable property, movable also there are some stipulation which I'll explain later. 5 million. And if the original amount was 5 million and if the outstanding has come down to 3 million, still you can go for parate action. If the original amount was 3 million with the interest component, if it has gone to 5 million, you can't go for parate action. So remember, so today, if you see the papers, newspapers, earlier, of course, banks used to regularly go for parate action, but today now the banks are very careful in using this parate action because they have been told to use it carefully because the customer has the option of going to courts for injunction. That's why I always tell the people who are involved in credit work, whenever you are speaking to the customer and if the customer says, I will come and deposit money tomorrow, immediately you must send a letter to the customer. You must send a letter to the customer, registered post, have the letter in your file. So that in case if the customer goes to courts for seeking injunction, you can counter that. You can always go to courts and say, no, we have been talking to the customer for the last 3 years. We have been talking to the customer. This is the same story he has been using it. So parate action is a last action. So to simplify the answer, what is parate action? If a facility has been granted against immovable property and if the original amount is 5 million, you can go for parate action. That is, the bank has a right to auction the property. But this is the last option and not the first option. Is it clear? Is it clear?
So, small question.
Yes.
If the original amount granted is 5 million and the present outstanding is say 1 million, can we go for parate?
Yes, you can go for parate action.
So the other way, now if the customers granted a term loan, say 2 term loans totaling to 5 million, by 2.5 each.
Yes.
Again, can we go for parate?
Yes, you can go. The same property, no? If it's the same property, you can go. If it's the same property, you can go. In other words, supposing the original amount was 3 million and with the interest component it has come to 5 million, then you can't go.
Right.
Yeah. Then, now, what is parate? Parate, I have explained to you all, but anyway, just to make it clear for you, parate execution is one of the common most means of money recovery employed by the banks in the country, covering immovable property obtained as security. Parate execution is the right of the mortgagee to sell the mortgage property without the intervention of the courts. This right, which was previously available to all the state banks, was extended to all commercial banks in 1988. The limitation has now been enhanced to 5 million. Just imagine the banks have lost a powerful weapon because it has been misused. From 150,000 rupees, it was enhanced to 5 million. Now see, we have lost a powerful weapon. Now this is what is parate. This is the notice which appears. When you say parate action, this is the notice which will appear. This is the notice which will appear in the paper. Now here HNB has advertised, this customer has defaulted. So they have advertised, they have put a notice. Now this is the type of notice which will appear in the newspapers. So what is the action? What are the action to be taken before going for parate action? This act empowers the bank to resort to parate proceeding. It empowers the board of directors of the bank to dispose the properties mortgaged to the bank in case of a default. Action before parate, notice of resolution should be published in the government gazette and a daily newspaper in all 3 languages of the country. Notice of the resolution should be served on the borrower. Notice of sale should be published in gazette and the newspaper prior to 14 days before the auction. So this is the type of notice which will appear in the newspapers. But remember, again, I am stressing the importance of parate execution. This is the last option and not the first option. And remember, if you are handling credit, if you are handling recoveries, if a customer does not pay, if he doesn't pay and you speak to the customer, you dial the customer and tell the customer, sir, your loan is in arrears. If he say, I will deposit 2 lakhs next Friday, follow it up with the letter. Send the letter by registered post and put that letter in the file. Because in case if the customer goes, if there is a parate action, if the customer seeks the intervention of the courts, your lawyer will ask, the bank lawyer will ask, he will ask you, can I see the letters what you have written to the customer? You will say, no, I don't have any letter. We have been talking. The lawyer will say, how can I go and tell the courts that you have been talking? This customer is telling that you all are not giving him enough time. But you are coming and telling me that you have been talking to the customer for the last 2.5 years. You have been talking to the customers. So how can you prove? How will you prove? You immediately show the letter, registered letter when you are sending letters to the customer. Registered, you put registered, copy also say registered. So you file it. When you say registered, it's deemed to have been received by the customer. So that is accepted. So that's why you always say, when we were handling, whenever we talk to the customer, when I had told my staff also, when they talk to a customer, immediately they send a registered letter. Letter goes. Customer will say, I will pay before Friday. Then next Friday you speak to him, he'll say next Friday after next I will pay. So immediately you must send him a letter. That letter should be in the file. So remember again, parate action is the last option and it's not the first option. This has to be understood by all bankers. Now coming back to this particular slide, benefits in obtaining immovable property, the value is not only stable, it is on an increasing trend. Bank has a solid legal right over the property, solid asset, the value remains intact and does not depreciate. Parate execution ensures easy realization in case of an eventuality. Motivation on the part of the borrower to honor their commitment in view of the valuable security held by the bank. Easy to monitor, peace of mind to the bank. Then it will allow you to retain the customer. Customer cannot go to the bank, another bank, without your blessings. So, is it clear to you all now? Is it clear?
Yes, sir.
Right.
Yes,
so
sir.
now we are coming to the today's end of the session. Is there any other question which you all want to ask? How was the session today? How was the session?
Very good, sir.
Yes,
Right.
it's interesting. Yes, sir.
Very good, sir.
Thank you.
So nice to hear that. So go through the handouts, and if you all want any questions or anything, you all can always contact me. My number is not 7777. Make a note of it. Not 7777 6654 not. Not 7777 6654 not. So we will conclude the session. I know you are hungry. So we will conclude the session today. So next Sunday also, sharp at 8:30, we will meet you all. So thank you very much. Stay safe and stay blessed. God bless you all. Thank you.